Soybeans, meal, oil. You want to buy some soybeans? Soybeans. Who wants soybeans? Welcome, traders. It is the moment you've all been waiting for. Thanks you for being patient. And it is Profiling for Profits with Jim Dalton. A brief introduction to the legend here. Jim Dalton has been trading for over my years, and he's the author of 3 great trading books: Mind Over Markets, Markets and Profile, and his most recent one, Markets and Momentum. I have read the book. It is excellent. But Jim, a member of the Chicago Board of Trade, as well as the Chicago Board of Options Exchange. He was the executive vice president of the CBOE during the heyday, and he has been in the markets for quite a long time. He is a legend in the markets. He is the master of market-generated information, the professor of profile. Ladies and gentlemen, Mr. Jim Dalton. Jim, how are you today?
Well, I'm feeling pretty good after that introduction.
Yeah, there you go.
Anyhow, I've known John for a long time. John, thank you very much. I want to start off today with a couple of comments. My favorite author is Josh Waitzkin's. His book is The Art of Trading. Josh was international champion in 2 disciplines. 1, chess, 2nd, martial arts. His dad made one of the movies after him, Searching for Bobby Fischer. It is an absolutely wonderful book, and he is real legitimate. It's not an easy read, but you don't become the top in the world in 2 disciplines without really understanding how to learn. Josh recently interviewed an individual who's got a title of being the best lion tracker in the world. The quote from the lion tracker was, "I don't know where I'm going, but I know how to get there." I think that's probably one of the most applicable quotes to trading that I've ever heard. The markets are random. The markets are random. And when markets are random, you don't know where you're going, but you do have to know how to get there. Now, what I'm going to say now is probably going to upset an awful lot of traders. There are so many traders that are technically oriented, and I am not technically oriented. Price is nothing more than an advertising mechanism. I believe to be successful, you need to be able to read the markets as they are unfolding. That doesn't mean that I'm oblivious to the 50-day moving average, the 100-day moving average, etc. But my reliance is on the market and the information that the market is giving me right now. I do a short piece each weekend called The Week Ahead. And last week I was scanning some of the comments that the readers made. And I see some of the comments and I said, I would be very surprised if that person's profitable. One comment was, basically I'm clearly wrong, the market's going higher. Next comment was, he's wrong because we're in the right shoulder. I mean, markets don't work that way. Yes, it's okay to see things like that and view the market, but you have to have mental flexibility to go with the changes that occur in the market, and particularly in a random market environment. Now, in order to help this come to life, I want to replay yesterday morning. We'll replay yesterday morning, and then we'll take a fast look at the charts, then we'll go to questions. Jen, can we replay yesterday, please?
Yes. We've got it queued to a minute before the open. And what speed did you want to start off at?
We'll start at 5 times normal speed.
Okay.
The first thing, as we replay yesterday, I want you to pay attention to the previous day's high. And I want you to be able to make sure you understand what the market does when it reaches that previous day's high. Now, what I think has happened here to a lot of traders, the big sharp down on the day before, and then a recovery. A lot of people, I believe, think, okay, we had a rejection. We had the rejection in the market. The market's going higher. I think what we had was a short covering rally. Now, a lot of people don't understand that a short covering rally, particularly if you're momentum oriented, the short covering rally may look fairly impressive to you. However, short covering can weaken a market. If short covering is not joined by new money buying, it will weaken the market. When the market is really short, you have to buy to cover those shorts eventually. If you try to cover those shorts, you are actually weakening the market because you are taking some of that support away. Short covering misleads a tremendous number of traders. Now, the next thing that happens that you need to be aware of when you open like yesterday, when overnight inventory is long or short, doesn't make any difference, but there's about an 85% chance that you're going to get a counter auction to correct overnight inventory. One of the most misleading things that occurs is when you get a correction to overnight inventory and you misread that for new money buying. So as we came in yesterday, the market is attempting to rally in here. Now remember, as we go higher, pay attention as we get up there, pay attention to the previous day's high. Jen, speed it up to about 10 times normal speed, please. So we've opened within the previous day's range. You opened in the previous day, that is yesterday, right?
Yes.
Okay.
The 26th. Yep.
Okay. So go to 30 times till we get up to the high.
So what we're looking at, folks, is the profile just to the left of the profile that's being created right now is the overnight night before last. Or is that
Stop
last
right
night?
here. Sorry, John, go ahead.
So what we're looking at here is the profile just to the left of the profile that's being populated right now. Is that last night or night before last?
That would be night before last.
Night before last. Okay, so the profile that we're kind of focusing on here is the profile just to the left of that, third from the right. And you see that high up there, right there. That's it. Perfect. Perfect. So it's just making sure everybody's in context with us here. All right, go ahead, Jim.
Okay. Now, one of the things, the harder it is to take out a reference, the greater the odds that that reference will be taken back out later on. Now that's a nuance. That's a nuance. It takes your involvement. So Jen, continue to play this at 5 times normal speed. Notice how difficult the difficulty the market has of taking out the previous day's high or Wednesday's high. Now we're at 5 times normal speed. So what's happening? Short-term traders are automatically selling close to that high. That's, short-term traders have a tendency to buy and sell at mechanical levels. So they're mechanically selling as close to the previous day's high as they can get. So you see the market sells off. Now what's that doing? That's getting their inventory short. That's a very dangerous situation if there's no downside follow through. Okay, go up to about 10 times speed. You see, remember, we're at 10 times normal speed. Stop for a second, okay?
So now it's selling up there.
It tagged the high, and one more time, or one tick below it, and short-term sellers immediately sold it once again. They have a tendency to sell at exacting levels. They love to sell highs. They love to buy lows.
Mm-hmm.
That creates a tremendous inventory problem in the market. Okay, Jen, continue to play, please. Now, we have no excess on that high. The odds of that high being taken out right now is because there's no excess. Now we're in the second half hour. See how much trouble they're having taken that out. Remember, I said the harder it is to take it out, the greater the odds that we will come back through it.
Interesting.
Look at that. They're selling it right again. Mechanical selling right at that level.
Uh-huh.
That is a very dangerous sign. Those are what you're always trying to know. Who am I competing against? When you're getting that kind of selling, you're competing against very short-term traders. Those are the weakest of hands traders, and they are the ones that get inventory constantly too long or too short. Constantly selling this market is probably getting inventory very short in here. They see them once more time. They finally got it out.
Kind of busted it out.
Still selling, coming back in. Okay, now there. So now they finally got it out. We've got this. We've got the stops, and now they're reversing and going to the buy side. What you're going to see is you're going to see this market go up. You're going to see it come back down several times, almost exactly to that previous high. When it comes back down to almost exact that previous high and they buy it, that is another indication of weak hands traders. Now, this is difficult because they're not necessarily wrong, at least for that moment in time.
Sure.
But the odds are that they're going to be wrong for a slightly longer period of time. Okay, so Jen, go ahead to 30 times normal speed. So you saw how hard it was to take out Wednesday's high. They got the high. Now everybody's excited and they're in there buying. Watch this market. Watch it come back down. Okay, back to short-term traders. One more time, they buy it exactly or within a couple ticks of that low.
Hmm.
We're back down again. Back up. This is, when I see this, I know what's going on. This is weak hands traders getting longer and longer and longer in the market. You're going to see this take place. This is one of the longest I've ever seen of where they've come down. I think they came down to it 4 times. I'm sorry this takes a little time to play out, but this is really important because these are the kind of situations that can get you in very serious trouble. If you understand what's going on, you can buy those lows with very tight stops, but you do not want to give it any real leeway. Okay, so now we've made a new high. Jen, go to about 50 times normal speed.
Yeah, if I remember, we made a few new highs there, up here. A couple
Yes,
of
we
new
did.
highs at least.
Yes, now watch this come back down again. Now we're going to play this at 50 times normal speed in order to get through it. Now you see it come back down again. Watch what they do. They're going to buy it again, almost at that exact level.
That same spot.
Okay, they're going to take it
There
back
it is.
up.
To the tick.
Take it back up very quickly. Now, what is going on here? Short-term inventory is getting excessively long. Okay, stop here for a second, Jen. Now, you just saw it go back down again. Now, what misleads short-term traders so much is this goes on for a couple of hours.
It does.
And it puts you to sleep. It puts you to sleep, and you say, well, the market's going higher. Now, what it's doing, it's not necessarily going to break, but the situation is if there's any little hiccup in the market, the odds are that it will come back through there with a vengeance. So all that
And it
inventory that they've been buying up there is getting in weaker and weaker and weaker hands. These are the hands that panic. So if the market comes back down through that, they have to sell that inventory. As they sell that inventory, that gets the momentum to the downside, and then traders jump on that momentum. And then they get themselves caught in the other direction. Jen, go ahead and play this out at about 50 times normal speed. So I think the
What
fourth
speed
time
do you want it at, Jim?
50 times normal speed.
Okay.
I think we went down there 4 times. We're going to play this out very quickly. Most traders don't realize the danger that's going on. They fall asleep in this market.
Back
One more
to
time.
the low. Back to
the low. They take it up again. This is just short-term inventory getting excessively long. A dangerous, dangerous situation. This is a result of traders that don't understand markets and how markets operate. They're simply looking at price. They don't understand anything deeper than price. But the risk to longs is huge in here. So you see, one more time, they bought it almost exactly at that level.
And there it goes. How? Okay, Jim, can you stop it for 1 second?
Yes.
Jen, thank you. At the highs there, you're often talking about tempo. There was no tempo at those highs. Look at all those even highs up there. Isn't that a little bit kind of weak as far as a high is concerned? Or do you see a lack of tempo up there?
There was a lack of tempo, but I was looking at the bigger picture. It was just late laggard, short-term traders getting long, buying every
Right.
break in the market, getting themselves excessively long with inventory, and not understanding how much risk they had. Now, I want to play this out all the way because you're going to see these same traders do the wrong thing
Same thing at the
again
top.
in the opposite direction. So unless you, if it's okay, John, we'll play through here.
Yes, please.
Okay, play it out at regular speed, or 50 times.
There it goes. They trying to buy it there now.
Okay, now as this is playing out,
Uh-huh.
what is going on? These traders they're emotionally, the emotions are high, the liquidation was high, the emotions are high, everybody's jumping on that. And when you see it market spread out like this, the chances are early on they got themselves too long, the chances are they're getting themselves too short in here. Now you also have the prior low that we had from the break the other day. It did not get that out. The market stopped right there. But this is strung out. This is pure emotion. This is where traders do themselves in. And this was just, what you're going to see as we play this out. What I wanted you to feel, the emotion
shorts.
on the high, and understand how traders got themselves in trouble. And it takes a lot of patience because it's set up there for a couple of hours. So keeping your hands off of it is very, very difficult.
Uh-huh.
It takes a tremendous amount of patience. when this market breaks, now they get the inventory exception. They go from exceptionally long to exceptionally short. When it's strung out like this, that is usually an indication of extreme emotional selling. And if you think about when you make emotional decisions, are they usually your best decisions? No. Okay, I wanted to show this because it is just so important, because these are the days that make or break you in the market. Okay, we can stop here, Jen. I wanted
Thank you,
people
Jim.
to see this, and I want you, as you remember the day they took this. They took most of this back before the
Yeah, they
day
did.
was over, because they got it too short. They got it too short, and then they squeezed them all day long.
Yes, they did. Wonderful. Thank you, Jim. Thank you for that.
Take any questions you might have.
Okay. So Jim, I read the book. Wonderful book. Robert is quite an author. You are quite an author. And there was one question that I know a lot of people are going to ask when they read the book, as soon as they read the book, and it was something we talk about quite a bit here. Well, first, what is the biggest difference that you see between your third book and the first two?
Experience. If you notice, the first book had an awful lot to do with the fundamentals of the profile, forming the profile itself. We talked about how do you learn, and which is really important and still relevant today. The first book opened with the point of view of how do you become a concert pianist, and you go through 5 steps. You go through a beginner stage. The piano has black keys and white keys. You
Right.
then get to competent, which is the third stage, meaning you can play Beethoven exactly as it's written. As you get to the final stage, expert, you and the piano are one. But it's important to understand that learning process. So many times, short-term traders, and I know from all the work I've done over the years, that the success ratio is extremely low. Most traders don't have the patience. They don't have the patience to gain the skills that they need to be a competitive, successful trader. But if you understand the first book, it goes through those learning steps. But what the first book lacked was a deeper understanding of the emotional issues we deal with as traders. And this book is loaded with, the many, many years of emotional factors that I had to deal with. And as you remember, I talk about, I went through a period of over 20 years where I was not profitable. I made every mistake possible. I went to every indicator possible. I knew all this stuff, and that really was not meaningful to me. When it finally dawned on me that you have to be involved in the flow of the market, and forget about the traditional technical indicators that people work with. Remember, and this is key, this is what separates me from almost all other traders. Price is nothing more than an advertising mechanism. But yet, so many people are hung on momentum. They make price everything. And that is a tremendous trap in the market. What I was trying to show you by replaying the early video was the importance of context. Remember, we started off in how hard it was to take out the early morning high, or the high from the previous day. Right. If you had good, strong underlying buying, you're going to take that out right through it. And you didn't. So that was an early morning clue to me that when I played a lot of, I started off with handball, and then I played a lot of racquetball over the years. But one of the things you always wanted to know, who are you competing against? Is it a left-hander? Is it a right-hander? How good can they hit the ceiling shot? Are they good at the ceiling shot? Or, can you back them into the corner? Who are you playing? You never played the same person twice. And you're never, when you're in the market, you're never up against the same competition. You have to constantly have some assessment of your competition and what they're doing. For example, yesterday morning, I could see that the competition was getting excessively long, and I knew that competition was weaker hands traders. When the market broke, these same traders went from being long to being short, the classical whipsaw. And as the market broke, it didn't take out the low from a couple of days ago. So we were
Right.
still within this trading range. But now they've gotten themselves from too long to too short. And then the rest
So,
of the day, you get this short covering rally in there.
so
So
Jim,
again,
is there
knowing who your
is there
competition is key.
a specific thing that you're looking at, or is it really more intuitive and experience that points out the fact that this is probably, well, you already did say, when they started buying, when it was hard to get above the previous day's high, and when it finally got above there, they kept buying it. We weren't seeing the upside tempo. I can see how that would be one of the telltale signs, but intuition and experience has a lot to do with understanding the lack of tempo at those highs, and recognizing that's probably shorter time frame, weaker hands buyers at the top there, which so often that is the case, and the weaker hand sellers are at the bottom. It always looks best at the top and worst at the bottom. I got a question I got to ask you. I know a lot of people are wondering about this because we talk about the initial balance quite a bit. And you say that you no longer look at like named day types or opening types, and you don't really you view the initial balance as a valid reference anymore. Can you tell me a little bit about that?
Yeah, that's correct. It all of these things sounded nice. If you recall, I paid $10,000 to Stottlemyre uh, to sponsor his book, and that positioned me.
Mhm.
I started going to his classes, and then when I wrote my book, I wrote a lot of what I learned from Pete. And writing things down is a great learning process. But
Mhm.
over the years, I seriously investigated everything. In some cases, markets changed. In other cases, they just weren't valid. For example, the day types. Open and drive was one of them. Well, open and drive,
Mhm.
if you're breaking out of a range, is certainly different than open and drive if you're in the middle of the previous day's range. So again, I come back to context is is everything in there. And so that's what it just kept going through that process. But then initially they talk about initial balance. Well, I've refined that. I don't use initial balance, but it's not totally disregarded in my mind. For example, if the
Okay.
early morning range is very narrow, be careful because you're either going to have a continued narrow day or you've got a chance for a big breakout one way or the other. But what I do, the first thing I look at is overnight inventory. Is overnight inventory long or short? I know that there is about a 75 to 85% chance that we will get a counter auction relative to overnight inventory. I know that the 15% of the time we don't get the counter auction, for example, if overnight inventory is long and we don't get a counter auction, I know that that's a sign that the market's pretty strong and we've got a pretty good chance for a trend day because the odds are you're going to get a counter auction. You don't get that counter auction, there's a message there. As you know,
Mhm.
John, you and I have talked about this before.
Uh,
What doesn't happen in a market is often as important or even equally more important than what does happen. So when I've got long overnight inventory and I don't get that counter auction or that correction to overnight inventory, that's a pretty good indication to me that there's some pretty good underlying strength in the market.
it's
So
more than just short time frame, weaker hands buying that thing.
that's right. There's stronger hands. When you don't get the counter auction, it's a sign you probably got pretty good, pretty good strength. But I also look and I say, okay, does the market open within and where relative to the previous day? The closer the market opens to the center of the previous day, the greater the odds that I'm going to have a rotational day. Nothing's absolute, but the greater odds that I'm going to have a rotational day. So I'm looking for smaller opportunities in there. Now, the next thing I look for, and I don't, it's not a checklist where it's 1, 2, 3. These things go on simultaneously. But I'm looking to see how much confidence is there from the opening. Whether it opens outside, inside, or above the previous day's range, how much early morning confidence is there? The greater the confidence early on, unless it is just short covering a long liquidation. And you have to understand what was the inventory probably going in. But I look at confidence. How much confidence is there? And it's those three things that have replaced focus on initial balance. Okay.
Awesome. Thank you for the answer, Jim.
Shall we
I
do
know
a
a lot of
commercial?
people were wondering about that.
Yeah. Shall we do a commercial?
Sure.
Jen, you wanna do a commercial?
Sure. So our website, jimdaltontrading.com, and if you go to the courses page, that's where you'll find our offerings, and you'll see that the primer is featured up here at the top. But we do have an updated live market profile primer that is going to be running from April 23rd to May 1st. And this is a great course for those of you that are new to market profile, those of you that maybe know a little bit, but you want to make sure you understand the concepts as Jim intended, or for those of you that want to refresh your market observation skills and trading basics, because everybody knows that if you are a professional, you always go back to basics. So this is something that is on. It's currently on sale, I believe, for $469. As we creep up and get closer to the start of the class, the price will go up. You do not need to have any market profile charting software to join us for this course. All of the webinars, live webinars, are recorded in case you're not able to attend, or maybe you live in a time zone for which you can't attend all of the courses live. Completely understandable. Participants of this primer will have access to materials and the recordings for 3 months after the course finishes, so that you have time to review. You can go and download the schedule that you see here from the details on the primer page there. So if you have any questions, by all means, you can always contact us. The number at the bottom of our screen, I'd be happy to speak with you, or you can shoot us an email at jimdaltontrading.com. For those of you that maybe you're not interested in the primer, you can join. By the way, the primer is a live course that we only do a couple of times a year. So if you've been on the fence with it, now would be a great time to sign up for that. We also have our Foundation and Application of the Market Profile e-course, and this is an online at your own pace e-course. And it covers more than what we can cover in the primer. So the primer is an 8-day live course. The first 4 days, we take the linear teaching material from the Foundation e-course, and that's what makes up the first 4 days of the primer. And then the latter 4 days of the primer is live markets, Jim narrating the live markets and pointing out those concepts. And it's also great because for those of you who have already done the Foundation e-course, or maybe just recently got it, you guys kind of have a head start with getting clarification questions, because you can go through the material, the Foundation e-course, and then ask your clarification questions in the primer. So we've had some people who are excited to do that. So I just wanted to let people know that that's something that you can do too. But if you're not able to join us live, or you're not interested in a live course, you can always start off with the Foundation e-course. And also, by doing the Foundation e-course, which is usually a prerequisite to join us for other more advanced classes that we do. But for the primer, you do not need to have, there's no prerequisite requirements, and you don't have to have market profile charting software.
Jen, thank
just
you.
one correction. Yep, one correction that I just wanted to make. You can find this page about Jim's book if you want to order it. It's available on Amazon right now. It's actually on sale. You can go resources, books. And the book that Jim was discussing when we started this session was The Art of Learning by Josh Waitzkin. I think, Jim, you had mentioned The Art of Trading. It's The Art of Learning by Josh Waitzkin. So you can find the link to his book here as well.
Thank you. Jen,
Thanks,
thank you
Jen.
very much. John, before you go to the next question, let me just make clear that we get the question all the time. If I take the primer, will I be able to be a successful trader? The answer is probably not. My goal, if you are struggling with trading and it's difficult for you, the realistic goal, if you start with the primer, would be to break even within 2 years. And a lot of people say, "Oh, I don't have that kind of time." Well, ask yourself what's happened in the meantime, because I know what the success ratio is for most traders. I equate it a lot of times to people that sit up in the stands of the baseball game. They know all the statistics, but they can't hit the ball. It takes thousands of times at bat. Anyhow, I don't want to scare anybody off, but I want to make sure we're not in the business of misleading people about what it takes to become a successful trader. It is hard work and it's dedication. If you're willing to do that, I'm willing to share my many, many years of experience. And as I tell people, there's probably nothing that I have learned the easy way. John, questions?
All right. Jim, I always remember you saying you'd probably see a lot more successful traders, but most people either run out of money or run out of time. All right.
Yes.
So, all right, we're going to go through some of these questions. I know we don't have a lot of time left, so I'm going to kind of do them in lightning speed here, if that's all right. I got Thomas asking, can you use market profile for overnight sessions?
The answer is yes, but you have to be experienced because it trades differently overnight, because the makeup of the competition is generally weaker hands traders. The references will be more exacting overnight, and there's more of a tendency to follow the leader. And as I say, about 85% of the time, we get a counter auction or correction to overnight inventory. And you need to understand what's important is to understand how overnight inventory relates to the day time frame, because you come in the morning and overnight inventory is up 20 handles, and all of a sudden it's hard not to have a bias to the upside, and all of a sudden you may get a sharp correction to that overnight inventory. Look what happened today. Okay.
Yep. Thank you, Jim. Do you look at an opening range or anything to that in that way? I know you look at the opening price or the opening tick. Do you still look at maybe a 1 minute opening range or a 3 minute opening range, anything like that?
Absolutely, positively not. It's absolutely the last thing I would do. As I said
Really?
earlier, I look to see, am I opening within or outside of the previous day's range, and how
Sure.
far within or outside. The closer I am to the center of the range, the greater the odds I'm going to get rotation. Bigger trades are going to be near the extremes of the previous day's range, or they're going to gap in or out.
Got it. Thank you. All right. A lot of folks are kind of wondering how you can sense when there's bigger institutions entering the market. And I think that one of the things that you've already said today was when you're coming up to a reference, a known reference in the day time frame or even longer time frame, if the market walks right through it, it's probably bigger hands traders. If there's exact trading going on at that level, it's probably weaker hands traders. Would you say that's correct?
Yes and no. If you look, one of the things I do, I always start with a monthly bar chart. As soon as each day is over, I go to the monthly bar chart. If you go to the monthly bar chart now, you will see for many, many weeks, the market's gone nowhere. There is
Nowhere.
no indication whatsoever that there's any longer time frame participation in the market. All kind of people that think they're going to look at, bids and offers and footprints and stuff like that to determine if there's, bigger players in the market. That's a fallacy. The bigger players do go out of their way to make sure you don't know what they're doing. if it was easy to read what they were doing, the other professionals would front run them.
Would know.
So
Right.
there's a lot of things that mislead traders that they think they're doing right, they think it feels right, but it's absolutely wrong.
Thanks, Jim. Syed has a question. Do you still consider like the value area special situation play or any of the special situation plays to be valid?
But what I do, the value area, remember the value area represents 70% of the day's market activity.
Hmm.
The value area helps center what's going on. Am I getting unchanged value, higher value, lower value, overlapping to higher, overlapping to lower? I will find, for example, if I trade with the direction of the developing value, for example, is
Hmm.
if developing value is overlapping to higher, I generally want my trades to be with that. That doesn't mean that I'm not going to, have a counter auction from time to time, but it's really if the value is overlapping to higher, it's rare that you're going to get a big reversal to the opposite side. You may get noise or news that takes it down there for a couple of minutes or so, but it'll come back.
Uh,
Is that perfect? No, but it will help center you. And so many people don't get centered. They're whipped around by price rather than understand what the trend is or understand if we're in balance, understand where value is developing for today. That will help you tremendously.
Thanks, Jim. Um, how there's a couple of questions here about the breadth of the market, and if market breadth is bullish but it's rotating, is there a key market profile signal that might help confirm whether it's balanced or preparing for a breakout? My thought on this is maybe a migrating point of control throughout the day could be something that could point that out. What are your
I,
thoughts?
I think that's more wishful thinking than anything else. Um,
Mm,
Everybody's looking for that. Everybody wants the magic, and it's not. It's seldom there. I mean, if you have, for example, right now I think we have a 4-day trading range going into PCE tomorrow morning. Now, I haven't looked at the market recently, but since we started this, but the market was testing. You've got a gap down there, and the market's testing that gap down there. If you look on
it
the
just
daily, do you
closed
have
it.
your daily bar chart?
It just closed it.
Okay, okay. That's what I've been. That's what I was going to show that earlier, but that's what I've been looking at. That what happens? I use a term called the semi-permeable membrane. So you've got that gap down there. What happens the first time down? The market goes down and it bounces. If you think
Uh,
about, say, you had a balloon and you touch that with a pencil and it bounces. Well, that little spot on the balloon probably weakened a little bit. Now it comes down a second day and it weakens. Comes down a third day, or like today, and it finally takes it out. I call
and
that the
it bounced.
semi-permeable membrane. Each time it hits it, it gets it weaker. Now, what happens? Short-term traders, the first time you go down there, anybody can see the gap on a bar chart. Oh boy, this is the place. This is support, and they buy it.
Right,
And
right.
then you get a bounce. They buy it again, and it get less and less each time until you break through.
It's osmosis, the semi-permeable membrane. I like it. I like it a lot. All right. Hey, question. Brit prop trader. Do you prefer market profile or volume profile, or is it a combination of the two?
I use market profile. And the reason, and I understand, I don't go to war over this. I know the majority of people argue about volume profile. Volume profile shows the volume and it makes everybody feel good. But what volume profile doesn't do, it doesn't record time the way I do. By using the traditional TPOs, it gives me a better idea of how much time the market is spending in one place. And I believe that, price advertises opportunity, time regulates all opportunities. So time is an extremely important component to me. And that's why I use the traditional profile that uses TPOs.
Do you feel as though that there's more kind of nuances and references in the market profile, the TPO profile, more than the volume profile?
I don't know. You know, that when you start looking at questions like that, you can spend a lot of time and get yourself off in a dead end corner.
Down in a
Look
rat
at
hole. Or,
the bigger picture of what's going on in the market. Start in the morning, get in the flow of the market. You know, do we have confidence? We have high confidence, low confidence. Are we getting higher value, lower value? Are we in balance or out of balance? Those are the bigger pictures. And so many times people get so focused on one tiny little reference that they lose their perspective and they lose the power. We've got so much intuitive power. Now you have to hone that and develop it over the years. But when you get so tightly focused on one point, so oh, I'm using the VWAP. I have people talk, oh, I use
yeah.
the VWAP, or I use this. They do themselves a tremendous injustice because they lose the bigger picture.
I love this question. If you were to start your trading career now, what would you do different than when you started?
John, I don't think we have enough time to answer that question. There's so many things it's so many things I wouldn't do. I know what I would do today. I mean, knowing what I know now, I would say concentrate. One, start with the bar charts to get a perspective of what's going on. Always start with the monthly bar chart to see the bigger picture. Then I go top down to the weekly and to the daily. It gives me an idea of what is going on in the market in a bigger picture. Then I come down and I use the profiles in order to start having some idea of what I might want to do the next day or today. But I always start with a top down approach. So many people are bottom up that they have their favorite indicator or whatever it is. They're bottom up rather than top down. And I started bottom up, always looking for the magic indicator. Oh boy, I'm going to go this seminar because they're going to talk about this magic, and that's all I need. Oh, it's the VWAP. It's the 45-degree line. You know, and what happens? You get locked in one of those things, and your chances of being able to be mentally flexible, no matter what the market does, is very, very limited.
Jim, I think this kind of goes with one of the quotes that I've written down from your new book. And that quote is, people failed to see what the world was telling them when the message wasn't one they wanted to hear.
That actually, I usually do that in two parts. It's you get two things that lock you up: what you need to have happen, and what you want to have happen. And those are probably two of the things that will get you in more trouble. You know, you got a loss. Oh boy, another couple ticks and I'll break even. We take so much damn risk to break even that we lose all the other information. So it's that really question of keep a larger perspective in the market. And it's what is the market doing, not what you want it to do or what you need it to do. How many times what you needed to do, your ego gets in place and boy, do anything to break even. Oh boy,
Yeah.
just give me that another tick.
All right. So one more question. And this one I think I think we'll probably touch on everybody. Now, one of the things about your new book, Markets Markets and Momentum, you do spend a lot more time talking about the self knowledge, and you talk a lot about the importance of journaling and the importance of journaling and recording emotions and changes in those emotions while you're taking trades, while you're in trades. How does this help create a process for I think what we're trying to do here is kind of absorb the information, become a little bit more intuitive after every trade, and then to just let go of the past and look for the next trade with a clear mind, centered and ready for the next opportunity. Um, you've always said, like, what is it? Market knowledge and self knowledge plus strategy equals
Your,
successful trading.
your result.
Yes.
Yes. But it's the real question is know yourself, know your strengths, know your weaknesses, know yourself. When I was in high school, I boxed for a short period of time, and one of the individuals I boxed against was an individual by the name of Timmy Brazier. Unfortunately, Timmy got killed in a car accident before we found out how really good he was. I took some pretty good beatings from Timmy, but what you learn very quickly, you learn what the other person's capable of, you learn what you're capable of, and you learn what you're not capable of. And if you don't learn what you're not capable of, you're going to be on your back or your fanny pretty quick.
Yes, I tried boxing once too until I got punched in the nose, and then I decided it wasn't for me. So kudos to you for sticking in there with Timmy. And again, we're sorry about his loss.
Hey,
But,
I always had protection when I sparred with Timmy. I had protection.
well, Jim, Jen, Robert, thank you very much for joining us today. We really just kind of touched on a lot of the questions, and I think we did a pretty good job of it. We really appreciate you spending time with us today, Jim, Jen, and make sure you tell Robert. I think this book is very well written. It's in small bites. It's easily digestible. I've only read this one once so far, but the other ones, I think I've read this one 3 or 4 times. And Mind Over Markets, I keep on my desk as reference for some of the things that we're looking at in these markets. And we really appreciate you, Jim, and your time, and Jen, your time. Will you come back and join us again, and we'll try and get some more of these questions taken care of?
Man, I'd
Sound
love
good?
to, but I want to say one thing. I've gone back 3 or 4 times and read my own first book. I mean, it's
bet.
amazing. You forget stuff. You
Yeah.
forget stuff. But anyhow, thank you. And yes, I'd love to be back.
Greetings, traders. This is Coach Robert with another episode of Topstep X in 5 minutes or less. In this video, we will review how to add and modify indicators. We have a single chart of CL on a 15-minute time frame. At the top panel, there's indicators. We can start searching, for example, MACD, and it will show in the list. If we want to add it to our favorites, we click the star next to it, and it will now show at the top of the list with the others. To remove from favorites, simply uncheck it. Let's add a basic moving average here, moving average exponential. It puts it in our indicator list on this side. We can hide the indicators or we can show them. Right now it is showing a 9 EMA. We can hide it or show it. Click on the gear for the settings. Let's say we wanted this to be a 50 moving average. If we want to change the style, we click on the Style tab. Let's make it yellow and make it rather large. And let's make it a step line, for example. If we want to add another indicator, we can do the same. Indicator. This is a 20 moving average. And let's make this thicker as well. These indicators are in the top panel. There are some indicators that are on a different panel. For example, let's take the MACD. MACD is in a separate panel down below, like this. Okay? We still have the same setup. Clicking on settings, we have all the inputs we like. We have the style. It's just that it's in a different panel that's down below. To remove, we just click the X. Remember to save the chart once you add additional indicators, and be sure to save your layout so it stays just like you had it when you left. Each indicator has multiple settings depending on the indicator, and has a visibility component, which is very interesting since we can turn on which time frame we would like to see a particular instrument. So let's say we only want to see the 20 EMA on hourly charts. We remove the remainder like this. We see the 20 EMA, it's just grayed out so it doesn't show because it's a 15-minute chart. And now we want to make sure that we do not see the 50 EMA on the hourly chart. Now when I choose 30-minute, the EMA 50 stays. 3-minute, EMA 50 stays. But on an hourly chart, the 50 EMA goes away and we are showing the 20. So let's say we wanted them both to be on a 15-minute chart. Here. And this one is already on 15 minutes. So now we go to 30. We only have our 50 EMA. But on a 15-minute chart, we see both of them. This is built into every indicator that is available on Topstep X. Now, those familiar with TradingView have probably seen there are a listing of community indicators where they can be customized and you can actually create your own using the Pine script built into TradingView. That is currently not available in Topstep X, although it is on the roadmap to have custom indicators availability. There are plenty here to choose from. And definitely check with the community for other settings. Maybe find something that works well for you. This will conclude the review of how to add, remove, and modify indicators.
Traders, the moment you've been waiting for is finally here. Auto OCO brackets are here. Each order entry can have its own take profit and stop loss, and OCO cancels the rest on fill. Whether you're a busy trader who can't babysit the charts, or a part-time futures trader who wants more full-time control, or anybody who just wants more disciplined exits without the constant screen time, this is definitely for you.
I'm interested to hear how you use AI for your coding as well.
Yeah, so I use Cursor. My process looks like this. So basically, I spell out what I want, and then I make a plan. And I usually, if there's like a big feature that I want to implement, I make a to-do list, a document. The other thing that I would do, I like hyper refine these plans. So I'll have them like go back and forth, and I'll audit the plans like continuously until I feel like, okay, all the holes have been patched.
I was doing arbitrage with Bitcoin. I had 30 Bitcoins. But the Bitcoin was at 140. 30 pence. And I bought them at Bitcoin DE 30, the half of 60. Yes. And I was selling them empty.
I've got this cute little sticky note right off my screen. Did you set your trailing stop? So I can remember at some point in my trading period, like, did I do that so I can lock in my profits and walk away? That's what keeps Topstep above all the competition. That's why I'm with Topstep. They're trying to help you win and be successful.
This is the only business that rises to the surface all of your emotional baggage. It'll come to the surface in trading. No other business will do that. All your beliefs will come to the surface, and you'll either deal with them, you'll manage them, or you'll be out of the business.
All right, welcome to Trading Mindset. With me is Dr. Brett Steenbarger, a trading coach, a professor, a trader, an author, some of the best trading psychology books. I have one of my personal favorites right here, Enhancing Trader Performance. Dr. Brett, it is such a pleasure to have you with us. Thank you very much for spending some time with us. How are you doing today?
Doing well. Thank you for having me. It's a good time to be talking about trading psychology because so much is going on in markets.
There certainly are. And I know a lot of folks are really excited to hear what you have to say about trading volatile markets, trading at all. We've got some really good questions. We're really looking forward to having this time with you today. We're going to kind of, I think, start with just kind of a general overview of trading with volatility or in volatility. Do you want to just go ahead and get started on that, and then we'll get down to the questions?
Sure. Yeah, so let's do a little overview of what's been going on, because the people I work with who have been successful in the recent market have been aware of what I would call the big picture and then zooming into the small picture. So they are looking at, if they're trading equity markets, if they're trading, for instance, the ES futures, they're looking at the asset classes surrounding stocks. So they're looking at the US dollar. They're looking at interest rates. They're looking at the changing shape of the rate curve. Are we pricing in increased odds of recession? Are we pricing in a weaker and weaker and weaker economy vis-a-vis the dollar and its various crosses? Is the dollar in other markets losing ground to perceived safe havens like gold? So they're looking at lots of different markets. They're looking at commodities. Are we seeing more signs of weakness? And of course, if there's going to be weakness in the economy, then that affects the valuations of companies, and that affects how interest rates will behave in the future, given the concerns of the central bank, the Federal Reserve. The problem we have right now in the big picture is that on one hand, we have signs of a weakening economy, and on the other hand, we have signs of tariffs that could be inflationary. And so you could get a situation where interest rates have to stay high because of inflation. The Federal Reserve is not as free to lower interest rates, which would make it hard to stimulate the economy, which would make it hard to get out of recession. The term for that is stagflation. And it's something we experienced in the 1970s when markets were quite weak. So these are things on the radar, big picture wise. And so on a day like today, the people I work with are looking at, how is the US dollar behaving? How are interest rates behaving? What stories are they telling? If I'm seeing weakness in stocks, am I seeing signs of weakness in other asset classes that tell me this is being priced into the market? So that's big picture. Small picture, what I'm finding is that with the increased volume and volatility of the market, those two tend to go hand in hand, that we're getting a lot more price action, and that it is difficult for short-term traders to adapt to that. So I'll give a very concrete example, something I wrote about in my blog, Trader Feed. I found that I had to adjust all of my charts. Whereas I used to look at 1 minute charts. Let's say I'm looking at the ES futures or the micro E-minis, the MES. Let's say that I'm looking at the NYSE tick, the number of stocks trading on upticks versus downticks at any particular time, because I want to see the balance of buying influence and selling influence in the overall stock market. Well, the 1 minute bars were not doing it. In order to catch the rapid movement, I ended up adapting to 15-second bars.
Wow.
Yeah, that's what I say. So, yeah. And so sure enough, many of the patterns that I was familiar with the 1 minute bars were showing up, but at this higher frequency, because there was just so much more volume, so much more movement, so much more volatility. As a result, changing all my charts, the indicators, the things I look at, remain the same, but on a different scale. So I ended up getting many more signals because I'm drawing more bars.
Sure.
And so that means I have to process quicker. if I did not make that adaptation or those adaptations, then it felt like I couldn't keep up with what was going on. And then that started to affect me psychologically, emotionally.
I'm sure.
So the best way for me as a psychologist, but also as a trader, to adapt to these markets was to adapt my trading style and the pace of my trading. And once I drew the more bars, so to speak, the patterns were playing out, albeit quickly, and I could make that adjustment and be very tactical in getting in, getting out. That allowed me to feel more in control. That allowed me to feel better psychologically, emotionally. So the takeaway here on the small scale is that by understanding what's going on second to second, minute to minute, even as you have a big picture, you end up feeling like things make more sense, and that helps your psychology. I wasn't trying to work on my psychology to help my trading. I was adapting and adjusting my trading to help my psychology. That is the single most important lesson I can share with those tuning in.
Well, thank you very much, Doctor. I'm posting your blog spot on our link right now, folks. Definitely check out this blog spot. There's so much really great stuff on there. So, folks, we are right at that 5%. We're below it in the Russell. Be careful. Right around that 5% level. So traders, be careful about that. XFA and live funded accounts don't trade below 5% off the settlement price. I've got those on my charts right here. These white lines represent those levels. Sorry to interrupt you, Doctor, but
This is important.
How do you look at a 15-second chart? It would give me heart palpitations.
Right. Well, the main chart that I use for the futures contract actually is a chart not in time, but in volume. I think I've mentioned that in the past. And so what I ended up doing there was, instead of each bar representing 5,000 contracts traded, each bar represented 1,000 contracts traded. So what you're doing is you're getting many more open, high, low, close, open, high, low, close, open, high, low, close.
Sure.
You're drawing more quickly, but I find that if I can just absorb myself in what's going on and look for the patterns, for example, one pattern that I look for that was very successful before this big rally was where you see selling and selling and selling and selling. The NYSE tick is going really negative, really negative, really negative.
Mm-hmm.
You're getting red bar after red bar after red bar on those 1,000 contract bars, and the market can't make a new low. So right away, even though I'm keeping up with the quick bars, I'm seeing the bigger picture of the chart and selling. We can't make a new low. And the tick is like negative 800, negative 900. So there's tons of selling, broad selling, can't make a new low, can't make a new low, make a new low. And what goes through your mind, if you've traded these things long enough, is these people are going to be trapped. These sellers are expecting the market to go down, and it ain't happening. And what's going to happen if we get some buying coming in? And sure enough, it's like around 1:29 Eastern time. Sure enough, all of a sudden we get this buying, and because someone put something on social media. So we get all this buying, and the tick jumps to over plus 1,000, and then it comes down, and again over plus 1,000, and again over plus 1,000, and the market rips higher, and all these people have to cover their shorts. But the setup was occurring before that announcement came out that, oh, we're going to delay for 90 days.
Right.
So, by looking at the short-term action and putting it in a larger context, things can make sense. But that takes practice. I'm a little bit older than most of the top step traders, I suspect. I've been doing this for years. And it's that practice, that repetition. At the end of the session, going over each of the charts. What did I miss? What were the patterns? Looking at it again, because so much is pattern recognition. And when you keep looking at the charts and internalize all of that, eventually it becomes part of you and you can see it in real time.
When you say internalizing, I mean, you can stare at charts for 10,000 hours and never learn a thing. How do you internalize what you're taking off those charts?
Yeah, it's a really good question, because it's not a matter of just staring at charts, but rather making sense of them. And so I'm looking carefully, replaying bar by bar by bar by bar. What happened here? What were the sellers doing? What were the buyers doing? How did that affect price? And looking to see how those patterns were evolving and noticing how that fit into a larger picture. So I'm not just staring at the charts, I'm seeing how it all came together. The pattern was how things unfolded. And if you see those patterns enough times, then you're more prepared to be able to act on them in real time.
More intuitively.
Yes, because pattern recognition is, by definition, fast thinking. If you think of the Daniel Kahneman distinction between fast and slow thinking is deep thinking, it's reasoning, it's analyzing. This is a much quicker process where you're putting things together and saying, aha, I've seen this before, this is what that means.
Almost like instinct. I guess it would get to that at some point.
Yeah, that's a great point. At some point, because if you rehearse enough, if you look at enough patterns and charts, then it becomes instinctive. It becomes part of you. As a psychologist, I've seen many patterns in people's lives. People talk to me about their problems, their issues, and those problems are also patterned. There are themes that run through people's lives, and you've worked with enough people that you've seen these themes again and again, and so it all starts to make sense to you. Light bulb goes off, and that tells you how you can help the person.
All right. Let's jump into our first question, if that's all right, Doctor.
Oh, absolutely.
Okay. This question comes from Jay. So with this volatility, you're going to have some traders that may have had their biggest days ever recently, either winning days or losing days. How does a trader how do you suggest dealing with that mentally? These environments can really skew one's perception of money.
Yeah. I'm thinking about a trader who I interacted with recently who had a really, really good day, best in a long, long time, and did an extensive review of what they could have done more, what they could have done differently, what they could have done better. In other words, they wanted to make sure that they came away with learning lessons and didn't just go away, feeling great about what they did, but there are still things they can learn. I did really, really well, but I could still be better. And I think that's a good mindset. The other mindset that's very helpful is crystallizing what you did well and how you did it well. If I had my best day, I must have had some best trades. Well, what did I do for those best trades? How did I come up with the idea? What was I looking at? How did I enter? How did I manage the positions? And you jot down learning lessons from what you did well, and what you jot down can become a checklist for what to do tomorrow. So, that's a constructive approach. I sort of like the spiritual attitude of this too shall pass. And when things go really badly, it doesn't mean that everything's going to go down the toilet all the time. And when things go really well, it doesn't mean that you've suddenly figured out everything in the world. And so to recognize that this is great, made money, but tomorrow I start with zero P&L and I have to do the right things.
Great answer, Dr. Brett. So, in dealing with that mentally, whether it's a big winning day or a big losing day, look at it from outside yourself, review what you did, take a look at all of the things that you decided to do, why, what you could have done better, what you can improve on, instead of just, dealing with it mentally without looking at it mentally. I really like that answer, Doctor. Folks.
Yeah, if a trader just said to themselves, I had a great day. Wonderful. What are the 3 things you did today specifically that you'll make sure you do tomorrow? Just that alone makes it constructive.
Excellent. Folks, we are beyond that 5% limit. If you are in a live funded account or an express funded account, be flat. And let's wait this out. And as Dr. Brett just said, this too shall pass. Doctor, I've got a question here. If a trader of some experience avoids highly volatile periods in the markets due to past negative results, could it be it's just not their market state? Or what if she feels guilty about missing out on it? So this trader apparently has some experience, doesn't like volatile periods, avoids it, but maybe feels a little bit guilty about missing out on the opportunities.
Yeah, I think that's a great observation by the person asking the question. And if you're not familiar with how to adapt to the volatile conditions, stepping back and not putting capital unduly at risk is prudent. However, I'm a big believer in gaining experience, and then markets change and you go back to being a noob. You go back to being a beginning trader. And so, I would say if the markets become really volatile, so I was doing well when the VIX was 15, then it became 20, then it became 25, and then the VIX jumped over 30, and I'm uncomfortable with all that movement, I would go back to observing the market and identifying how do the patterns evolve. The things that I look at when the VIX is 15, how are they playing out in the more volatile market? And I'd look for patterns without putting on any risk. And pretty soon, I think things will start to make sense. Like I said, I had to change the x-axis of my chart to some degree to get to that point, but things start to make sense, and then you feel more comfortable taking some risk.
So when the market state changes, whether it's volatility, direction, range bound, breakout, anything like that, I find that a lot of traders kind of get their gears stripped. There's a change in the market state, but it takes time for people to make that change. Maybe it's frequency bias, something like that. But when you're recognizing a possible change, maybe stepping back, learning from it, and then being able to recognize that a little bit faster the next time would be the right thing to do then, right?
Yes, and recognizing it faster, I like that idea, Hogue. And you can do that by looking at volume, because volume correlates with volatility. And if the volume is increasing, If the volume today is much higher than the usual volume at that time of day, then you know that there are more participants. That's going to move the market more. It's going to make for a different market. And it might be different enough that it does make sense to treat it like a different market and learn patterns anew. If you told, let's say, an S&P trader, you told them, oh, I'm sorry, Topstep has a new policy, you can't trade S&P, but we're putting you in natural gas futures. What the heck? Well, what would you do? Well, of course, you would have to step back and observe natural gas futures, and you'd look at Natty, and you'd look at Natty, and you'd look at Natty, and you look at the patterns, and eventually you'd get to the point where you would feel okay about putting some risk on. When your market gets much more volatile, it's like trading a different asset class, a different market altogether, and that takes adaptation.
I can't imagine having to change a product on the fly like that. Well, we can't trade an ES anymore. Let's go trade natural gas. Natural gas is scary.
Yes, I work with people who trade some of those commodities, and it's a different beast.
Yes, it is. I got a question here from D. How do we center ourselves when things start flying around and FOMO kicks in? Would you have any kind of practical exercise that would help with that? Would be beyond amazing.
Yeah. The idea of centering oneself is really important, and getting caught up in the market volatility would be the opposite of centering oneself. In the example I gave with my own trading, what I had to do to center myself was step back and make sense of how patterns played out under the more volatile conditions. And then I could return to the market without the emotional reactions, without FOMO, and so forth. But it takes that stepping back to make sense in order to adjust. Let's say I'm driving my car and I'm hoping to get to my destination at a certain time, and suddenly it starts snowing and the roads become icy. Well, I'm afraid that I might be late to my destination. And so I keep on the gas pedal. Well, that's not going to go well.
No.
So what I need to do is adjust to the conditions, and that's going to mean an adjustment of expectations. But once I process the change and adjust to the conditions, then it's no longer an emotional event for me. I know that I drive at 30 miles an hour rather than 50 miles an hour when we have snowy, slippery road conditions. Having worked in Syracuse, New York for many years, I know this.
Yes. So to get yourself back to center, it's just take a step back. Maybe, if there's something that happened, maybe you're carrying some venom in your veins for something that has happened or something that you have missed. Step back, let it go, find yourself back to center, and then re-engage.
Yes, because what you're missing out on is a reactive trading opportunity, so to speak. You're missing out on reactive trading, and that saves you a lot of money.
Great answer. Thank you very much, Doctor. What would you say, this is from Vince, what would you say goes through the majority of traders' minds during times of high volatility? And how do you counteract some of the bad things that probably go through your mind?
Perfectionism, I would say, is the number one bad thing, because you see so much movement, you think that you should be catching it all. And that perfectionism is what leads to the FOMO that we were talking about in the previous question, and could lead people to overtrade. And so what you want to do is step back and say, okay, it's more volatile, there's more volume. That means that a different set of participants is in the marketplace. If we get tick readings of plus 1,000, so 1,000 stocks all at the same exact time are trading on upticks. Well, that's not happening because a bunch of day traders have traded all the stocks. That's happening because large institutions are buying baskets of equities and doing it in a coordinated way. And so by tracking who's in the market, then you can step back and say, all right, what's going to tell me that they're trapped? What's going to tell me that they've been selling and selling, and the selling is becoming exhausted? They've been buying, the buying's becoming exhausted. What will tell me that the buying activity can't push us to a new high? So I look for overbought levels at lower price levels. What tells me that we're getting selling, but the oversold levels short term are happening at higher lows? Those are clues that tell you when people are trapped, and we can be much more selective, much more strategic about when to enter and why to enter. And the volatility itself will give us good movement on those ideas.
Okay. Thank you, Doctor. I think that really goes nicely in
you have to be grounded in what is signal versus noise. For you and your trading, what is signal?
Excellent. It kind of goes into this next question, which is, in the current market conditions we're in that are very headline driven, as it was yesterday, but I think I know the answer to this question, but I still want to hear your response to this. The current market conditions we're in that are very headline driven, do you think it's beneficial to wait for the volatility to start to enter the trade? Thought process being, once the market knows what it needs to do to react, can we just follow the trend? Now, you were talking about yesterday near those lows, selling coming in and not being able to make new lows. If you took that trade, you were able to be in before that big pop happened.
Yes, and or very early in that up move. In other words, the selling was exhausting itself before that announcement came out. And you can see that on any chart of NYSE tick versus the E-minis. But if you noticed it and then suddenly you get a surge of buying, then that's new activity, new participants coming in. And so I can get in and I'll get out at the low of that bar. In other words, if this is starting a new regime of buying, then we shouldn't go back to make a new low from that bar. You treat it like a breakout trade, in other words. We break out of a range on good volume. You shouldn't go back in the range. If you go back in the range, you stop out.
Sure. So basically, wait, kind of looking for the breakout or the volatility to begin to get into that in that direction would be a viable strategy in this regard, correct?
It's looking for the volatility, but it's also looking for the balance between buying activity and selling activity, which is why in my own trading, I never just look at price action charts. I always have to have indicators of buying and selling activity that tell me that how many stocks are trading on upticks, how many on downticks, and I have other indicators as well that give me that information of the balance between buyers and sellers. When that shifts, and that's accompanied by volatility, let's go. Yeah.
And you're going. What
And you're going.
indicators do you use, doctor?
Yeah, so if people want to check out my blog, I do share that on the Trader Feed blog. One of the indicators.
Here's the link to that, folks. It's in the chat.
Yeah, it's traderfeed.blogspot.com. And there are lots of different posts that you can read. But John Ehlers, the person who's done quantitative research on cycles in markets, developed an adapting moving average set of indicators. And so it's based on the basic technical principle of short-term moving average crossing above long-term moving average, and that's a buy signal. Short-term moving average dipping below the long-term moving average, that's a sell signal. But the adaptive moving average adjusts the length of time for the short-term and the long-term moving averages based on the dominant market cycle. So when you get frequent cycling activities, you'll get more of those overbought, oversold signals, more of those crossovers. So it's adaptive in that sense. I use the adaptive moving average on 3 different time frames. And I look for those crossovers to line up on multiple time frames. And then I look to see on those occasions, how does the balance of buying activity and selling activity play out vis-a-vis the NYSE tick, for instance? And that tells me that the balance has changed just as the moving average has changed, and that provides some pretty nice opportunities. It also pushes me to wait until all those things line up before making a trade. Now they'll line up more quickly when they'll line up more times when you're drawing more bars, because of the volatility of the market, but you still have to wait for the setup to play out, which is very helpful in preventing overtrading.
All right, doctor, it's unfortunate that the markets are in this condition right now. We got very close to that 7% CME limit in the equities. They're back off of there, but still hanging around that 5% level. So funded traders, XFA traders, you might want to think about just holding off for a little bit here. I've been keeping one eye on these things. No limits hit yet, and they have come off where they were. So we're back, basically 5% off the settlement price. So right now we may be in pretty good shape. And again, I apologize, doctor, for kind of turning to that, but we just got to let our traders know.
That's the important stuff going on for people who are trading right now. That's the
absolutely. Thank you.
Crucial thing.
All right.
I've got an eye on the charts too. So if I see something that you guys are locked in, I'm kind of the eyes in the sky right now. So I will jump in if it needs to be said. So you guys just do what you got to do.
That's great. Thank you.
Awesome, Gabe. Thank you. Okay. Doctor, this is from a doctor. It's a little bit lengthy. I'm going to try and shorten it a little bit, but he says, as a doctor, he's been trained to stay calm under pressure, whether it's in a clinical emergency or during a complex diagnosis. That kind of stress feels structured with clear protocols and some level of control. When I'm trading, especially during periods of high volatility, triggered by sudden events like Trump tweets or geopolitical headlines, the stress feels very different. It's more chaotic, unpredictable, and emotionally reactive. Find myself getting mentally hijacked, either freezing, overreacting, or second-guessing my plan. Why do these types of stress feel so different, even though they're both high stakes? How can I start to understand these different stress triggers better? And what strategies can help me build the kind of mental resilience that keeps me grounded when the market becomes irrational or emotionally charged? It's a lot.
Yeah, great,
It's
great.
a lot to unpack there.
Yeah, great question. It's a
Yes.
relatively easy question for me to answer because I teach in a medical school, and so I can see how physicians in stressful areas like in emergency medicine, how they develop those protocols that the doctor mentioned, and how they practice those protocols and observe cases and participate in helping out the attending physicians before they ever are responsible for patients themselves. So there's a prolonged period where you are an apprentice and you are watching things being done, you're helping do things, and that makes the stressful situations more familiar. And when they become more familiar, they're less stressful. That same process of training occurs in military special forces, for example. And so the reason that well-trained special force troops don't just freak out when there's an enemy attack is because they have rehearsed that again and again and again and again. And then after it all occurs, there's an after-action review and they learn the lessons. They can do it in simulation. So practice gives the level mindset. Familiarity is what takes away the emotionality. And so this is all a long-winded way of answering the doctor by saying you need to train yourself in trading the same way you were trained in medicine. You need to develop protocols. You need to observe. You need to have rules set down, checklists made out so that you know what to do and why to do that. And sure enough, when you develop those, you'll know what you're doing and why you're doing it, and it will feel less reactive, less stressed, less emotional.
Preparation, practice, and a checklist. Protocols. The doctor probably doesn't have the same protocols for trading that he does for practicing medicine. Great answer.
Yeah, let me just mention one thing real quickly. When I first learned trading, there were certain indicators I was interested in, and I would print out charts. This was back in the day, old style printers. So I would print out charts of the market and all these different indicators. And at the end of the day, I would line up the charts and see how the price action occurred and see how the indicators behaved. And I would look for the patterns. Day after day after day, I did this for a full year before I ever placed a trade. By the time I did place a trade, I wasn't necessarily an expert trader, but I knew what I was doing. I felt competent, if not expert. That preparation really grounded me in ways that would not have been possible if I had jumped into trading.
Did you ever trade on a trading floor? I know that you've worked with huge funds and prop firms and all of that. Did you ever trade on a trading floor?
Yeah, I never worked with people actually on the floor. I've worked with people who themselves have had experience making markets on the floor. And that's a very special kind of experience that people bring to trading. But no, I have never worked on the floor myself.
When I left the floor, I had some friends who started electronic trading before I left the floor.
Yeah.
And they were not prepared for electronic trading. They lost a lot of money. So when I stepped off the floor and decided to learn to try and trade on screen, at least I had the knowledge that they had a very hard time. So I understood it was going to be somewhat of a relearning process.
Yes.
How was that process? How did you handle that with people that did trade on the floor that were continuing to try and trade on screen? Was it a little bit of a different process trying to help them kind of unlearn what they were doing on the floor and relearn what they were doing on screen?
My goodness, yes, a totally different process because on the floor, you knew who the other players were on the floor and you could read their behavior, and those were tells. So it's a lot more like playing live poker. You could read the other players and figure out what they were doing and why they were doing it, and you would see certain people doing certain things, and none of that immediate feel was available online. And so
Mhm.
they had to figure out a different set of patterns to follow to make sense of the market. It was really learning a different activity in a way. And as a result, they had to really go back to being beginners. That's not easy for someone who's an experienced professional to be humble enough to go back and be a beginner. But I would argue that just like the person on the floor had to adapt to trading on the screen, people who have learned markets during non-volatile times, during more quiet
Mhm.
times, are now facing a whole different set of conditions with a VIX of 30 plus and need to
Mhm.
go back and observe patterns and become beginners again.
I think it kind of depended on the floor what kind of markets you learned to trade in. If you learned in volatile markets, they seem to have a much more difficult time when things were quiet. People that learned in quiet markets had a harder time when things became more volatile.
Yes, yes. Um, and over time, you experience enough market conditions that you're more able to make those adaptations. But early in a trader's career, that takes effort. That takes a real uh, preparation.
Yes. A lot of these folks that, stepped out of the pit and tried to learn to trade on screen never even looked at a chart before they tried to do that.
Right.
It was crazy.
Yeah.
A lot of them were just pure scalpers, pure pit scalpers, never looked at a chart, and then they sat down and thought they were going to be able to succeed on screen, which is it's extremely difficult. And trading at all is extremely difficult, but it's two different games being from the floor to the screen. Thank you for the for the answer there. So Omer's got a. I know you've dealt with this a lot, Doctor. When a trader gets to a profit target that they're trying to reach, whether it's a trading combine, whether it's a specific goal that they're trying to reach, maybe I'm trying to get my account up to $10,000. In my experience, and this was on the trading floor, when I put a profit target, a daily profit target, or anything like that in front of me, when I started getting close to it, that's when the problems started to happen. How do traders when they're getting close to reaching a goal, a positive goal, maintain the mindset like it's just the next trade, and I'll reach it eventually, but I can't push myself to try and reach this goal. And when you get to that close to that glass ceiling, if you will, things tend to blow up a little bit. Can you talk a little bit about that, Doctor?
Yeah, and two responses there. One is that the traders I work with who are most successful, they have process goals. They don't go into a session saying, I want to make this amount of money. If the opportunities are there, they feel they can do it, but they
Hmm.
have process goals. Their goals are to trade well. And if there's enough opportunity in the market, and if they trade well, then it's going to show in their P&L. But they're not
Right.
focused on P&L. They're focused on what makes for a good trade, one good trade, another good trade, another good trade, and let the P&L take care of itself. That's very helpful. And in their reviews, they're very process focused. what did I see well? What did I do well? What could I have done better? Rather than focusing on P&L. So that right away, making that a habit, I think is particularly helpful. The other response I have is a process that we used in Chicago when I worked in Chicago with a market maker in electronic futures. We had a separate P&L target, or we kept track of P&L separately, morning, afternoon. So it was like the morning was a day. And then when it was the afternoon, it became a second day. And so you had your goals and you had your activities. And at the end of the first day, which happened at 12 noon, at the end of the first day, you reviewed performance, set your goals, and you started with a fresh P&L and a separate loss limit for your afternoon trading.
Interesting.
So you're turning each day into 2 trading days, getting a lot more experience. But what that meant was, if you were doing well in the morning, then that's banked, and you start the afternoon with 0 P&L.
No. 0.
And yeah, you start the afternoon with 0 P&L.
Fantastic.
And like it's a new day. And that really helped traders in terms of adjusting to being up or down in the morning.
It's ingenious, so simple, but so impactful, I'm sure.
Yeah, it worked very well.
Huh. Fantastic. All right. I've got a question here from Shubham, who's in the chat quite a bit, asks a lot of questions, very inquisitive. And Shubham, don't ever worry about asking questions. There's no bad questions. The only bad question is the one that you don't ask. So he's got this question here. As traders, we often reflect on our mistakes, journal them, and make conscious efforts not to repeat them. Yet in moments of pressure, whether it's fear or FOMO or frustration, we often fall into the same patterns we promised ourselves to avoid. Despite our awareness, the behavior repeats. Why does this happen? And how can we rewire these patterns at the subconscious level to create lasting behavioral change? How much time you got, Doctor?
Yeah. So, I can go to the top of the hour.
Just a lot to unpack in that question.
It's a lot to unpack. Yeah. So what you want to be doing is trading with, initially when you're in a developmental phase, trading with such small size that the P&L doesn't matter. What happens is people get these P&L targets in their mind because they want these funded accounts. They want to get more, make more. And so they become very outcome focused. By taking P&L out of the equation, which is what we were talking about with the doctor's question, by just observing, and practice trading with small size, then the right trades and the right trading become part of us. We internalize those. And once all that is familiar to us, anything that we've done repeatedly, anything that's familiar, is not going to bring extreme emotional reactions. It's the attachment to P&L, trading larger than we are prepared for, and having trouble with the P&L swings that creates the emotional conditions.
Doctor, I think a lot of traders probably trade bigger than they're prepared to do mentally, emotionally, so maybe sometimes even physically. Starting small is, of course, the right thing to do. You've got to create the good habits that are going to continue to pay you over time. how do you suggest increasing your leverage, your trade size over time? I always tell people, going from 1 to 2 contracts is the biggest jump in risk you should ever take,
Mm-hmm.
because it doubles your risk. How would you suggest for traders that are looking to maybe get past their comfort zone a little bit? They've been trading for a while. They've been, making some money. They feel like they're ready to increase their trade size. How would you suggest that they do that and deal with the extra risk mentally?
Yes, and I think you hit it right there that you're going to make those bump ups in sizing incremental. You're going to do it gradually so that the size doesn't feel totally different, and you'll make frequent bumps as you're successful at the lower size, and then you jump to the new size and then you're profitable. Jump to the new size, you're profitable. One thing we talked about in the previous session was treating your bumping up of size the way you treat the weights in a gym, that you want to increase the amount of weight that you lift in the gym if you're building your muscular strength, but you
Hmm.
don't go from lifting 100 pounds to lifting 250 pounds. You do it in
Mhm.
small increments. And when you master the first bump up, then you bump it again, and you master that, and you bump it again, and you make it a doable process. Now, if you do it that way, then you're getting success, 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 and that builds confidence, that builds security, and
Good.
takes emotion again out of it.
Thank you, doctor. Well, I think
Absolutely.
we're getting pretty close here. I think we've got maybe time for one more question. Let me find a good one here. Um, there was a 1 second. You got to find this one. Uh, well, I mean, we talk about this a lot, but why do I keep making mistakes? I know not to make. For example, I'd hit a personal daily loss limit. I know I should stop, but I move my loss limit until I hit the maximum loss limit. Why do I break my own rules? How can I keep from continuing to break them? This is a really common question, a common problem, and maybe a good one to end on.
Yeah, and I would begin by completely taking P&L off the table. That I would trade in simulation mode, and I would follow the rules, follow the rules, follow the rules, and only get back to trading small size once I was consistent in simulation mode. And so by backing up and building the consistency, you prepare yourself to bump up the size in the right way. And those emotional conditions are not going to take over.
Basically, creating better habits through practice.
That's exactly it. And as you create those habits, you internalize those habits and they become part of you. The other piece I'll just mention is learning from each other. When people have good days, hopefully they share. I mean, that's one of the values of a community. And learning from what other people do well and sharing with others what you do well. And so now you have many more learning lessons per unit time per day, and many more things that can move you along in your in your learning curve.
Fantastic. Yes, everybody lifts each other up that way, right?
Exactly.
Well, Dr. Steenbarger, I can't thank you enough for joining us today. I hope everybody really got a lot out of this. I know I did. We
Well,
really
good.
appreciate you coming and hanging with us for a while. And any last words you want to kind of talk about before we move on?
One thing I've shared in the past, be alert, be alert, be alert to your best trading. At the end of the week, identify your best trades and study, study, study what you did well, because you'll internalize those patterns. You want to learn from your successes. We spend so much time fretting about our mistakes and going over our mistakes. We don't study and internalize what we do well. And so by focusing on our best trading, we become closer and closer to becoming the best trader we can be.
Fantastic, Doctor. Yeah, you got to focus on the good things you do, not just the mistakes we make. Well, again,
And
Doctor, thank you very much.
Early in the coming year, I will have a book coming out called Positive Trading Psychology, and that's going to be a main focus, is how we can learn from our own successes and build on our successes to achieve real success. So I'll be happy to discuss that going forward with everyone.
Oh, definitely. When does that come out?
Early in 26, like February.
Early in 26. Okay.
Correct.
All right. I'm gonna order it on Amazon, pre-order right now if it's on there.
Okay. Well, thanks so much, Hogue. Really appreciate it.
We appreciate you so much, Dr. Steenbarger. Have a great rest of the day. Be careful out there. It's a rough market these days.
Good luck with these markets. Okay, thanks.
Thanks, Doctor.
That's TopstepTV. Let's go.
Greetings, traders. This is Coach Robert with another episode of Topstep X in 5 minutes or less. In this video, we will review the chart settings and options. There are two ways to access the chart settings. One is the gear at the top right, and the other, we can right-click on the chart and choose settings. It's the same area. There are 4 subcategories for the chart settings. They're pretty straightforward. The first section is candles. We can see the body, the border, and the wick colors, which is a lot I like to have here. The last line, last price. The previous day close currently is not available. The high and low is, and it shows them plotted here in the chart. We can change all of these colors. And of course, we can change our time zone. The status line is what is displayed at the top right. We have the symbol and the name. Here it is. We can just have the ticker, just have the description, or both. Open market status is this section here, turning on or off. It'll be yellow or green. Open, high, low, close values is this section right here. If I mouse over the candle, move my cursor left and right, they will change according to that particular candle. You can turn them on or off. The bar change values is a percentage, which is here. And then of course we have the volume, which is here as well. I'll move over the green candle so you can see them a little bit better. This is what I like to see. The indicators is this section here. Whether we want to have the arguments, means what they are set at. By unchecking it, we can just have our straight titles or turn them off altogether. The values are added where the EMA here, the blue, the value of it is currently, well, 18184, but if I mouse over this area, it will show me what the value was at that area. And then the background is just some highlighting that goes behind it, like this, depending on the color of your canvas. The scales are just like it says, the scales on the right and the time on the bottom. The symbol name, we can see, we light up NQ. We turn on the symbol close price, again, that is not available. This is the high and low price, which we can see, it's showing it on the side. The indicator name, if we wish to display it, is showing it right here. But notice the value, indicator value, is under this current price. So I can choose the no overlapping, and it will simply keep them separate to make them easier to see. And these are all configurable options. Countdown to bar close is here. The plus button just makes it easy to the right-hand side, where if I click the plus, it will draw a horizontal line at that level. And finally, the canvas. You can set this up as your own view. Here's a gradient. The top is gray, the bottom is black. We can see it is a gradient. For example, if I choose blue, it will show the bottom is blue and the top is gray. Or if I want to choose yellow for the top, there's the yellow. You can set it any way that you like. Grid lines, whether you want to see the vertical and horizontal, or either one or none. Session breaks is this dotted line, and that is the market open, 5 p.m. Central Time each day. The watermark is what displays the instrument being traded. And the text is the right-hand side and the time down the bottom, and we can change the size of these and the color of the font. The lines themselves are these lines right here separating them. The navigation is down the bottom right here. It goes away, visible on mouse over, and this is so I can move the chart back and forth. And if it's completely off the screen, I can just choose this to reset the chart view. It brings me right back to the beginning. That will conclude some of the chart settings and the options that are available to you.
I heard you talking about the questionnaires, and yes, I look at every single one and I go through them slowly because I have designed this over the years, and it's in a special order, and I can tell what's going on with people that are in there. And a lot of people don't have a plan going in. They have some criteria that they haven't fine-tuned. Use the summertime to fine-tune those criteria. And then a lot of people don't use a stop. And on the stops, I suggest that people use a bracket order so they have an entry, a profit, and a target, and a stop, all at one time with one click, because you want to be as fast as you can. And that's the best way, a bracket order. There's not one high-end trader that I know that doesn't have a hard stop, ever. So it's not a wussy thing to do. It's a smart thing to do to protect your money. So create your plan. So we went through the criteria. So in the month, you're going to look at your indicators and fine-tune them. Throw out the ones that don't work. Take the stuff off the screen that you don't use. More is not better. Less and fine-tuned is better. So pick the criteria. Are we frozen again?
No, I think you're good.
No. Okay. All right. You froze for a second
you're good.
there. Okay. So check your criteria over the month. Fine-tune it. Prioritize the list. Most important, must be there for you to enter the trade. If those first 4 or 5 are not there, do not take the trade. And the other ones are nice to have that help you in the trade, but are not essential. Take everything off the screen that you don't use. I'm very big on volume. Volume creates volatility, creates motion. So I'm big on indicators that have volume. I'm big on indicators that use support and resistance. Why? Because all the big guys are pumping in those orders, and they're using support and resistance for a lot of their portfolios. Watch, here's a little tidbit in the trading. I don't give a strategy, but there's little tidbits. This is a tidbit from the 5-minute. If you watch the volume on the bid and the ask in the dome, if you're using the dome to enter trades, you might see big volume come in there. All of a sudden, 300 contracts all at once, and then all of a sudden they're gone. And so you got some of these big guys that are holding a price, and so they're trying to prevent it from going up or going down where they can manipulate it. So watch that. Sometimes you'll find whole numbers that have a lot of volume, because a lot of people have that as targets. They use whole numbers. So if you're in a trade, round numbers. So if you're in a trade and you're looking to use that round number, my suggestion is 1 or 2 ticks before it hits there to put your order in, because sometimes it'll just hit that number and come back come back again. So go 1 to 2 ticks before it gets to the whole number to be sure you're going to exit your trade when you have a good plan. If you're not in control of your trades on the entry, on the management, and the exit, you're probably trading with a block. If you're emotional at all, you're trading with a block. Okay, let me get back to the plan. So we have the plan of the criteria. We have a plan for how you set up your room. We have, I'm just going to do a quick recap. Oh, put down, you're going to do your 3 new things that you learned every day and reread it. Oh, a recovery plan. A lot of traders that have been going through the surveys don't have a recovery plan. And a recovery plan is part of your overall monthly plan. A recovery plan is if you have losing trades in the moment, you must be able to stop it, control it, and figure out how to get back on track. So create a plan for yourself, and everybody's different. So I walk away. I find when I walk away, I can clear my mind, I shake it off and let it go. You can't change it. You can't fix it. It's done, gone. Don't stew in it. Just get over it. Your goal is to get back on track as fast as possible. Go into sim when you come back after your walk. Go into micros if you have to. But do something that resets your mind and gets you out of that thinking. Examine the loss. I can't tell you how many people don't examine the loss after it happens. They just get sucked right in, and Mr. Market's very seductive, pulls you in, and he takes more of your money. So you've got to have a recovery plan after a few losses. I suggest that after a loss, you examine it immediately, find out what you did, make a modification, and then go back in. Then a recovery plan for a losing day might be more dramatic. When I interviewed, a good friend of mine was a market wizards, and it happened to be Mark Cook, and he traded 100 shares at a time. 100 contracts at a time. Yes.
Wow. Yeah.
And he mentally could not push the button. He came up with a plan that a girl sat across from him and she pushed the buttons and he told her what to do at what price. But if he lost big in the day, over $100,000, he had to mow his farm by hand until he was physically exhausted. And basically I said, I can coach you to not have to do that. He says, no, this works for me. If they have a plan, then I never try to fix something that works. So he would physically work it till mentally it was drained from his body by mowing the field. I mean, it was a crazy strategy, but it worked for him. So you come up with your own plan of what you have to do. You know, if I have a really bad day and I blow a number that's more than I should, I'll take the whole next day and not trade, or I'll trade in sim. Something's off. I did something wrong. The control is the key. You have to be in control. Okay. So set your environment, get physically and emotionally prepared, have a morning routine of how you do your setup, decide what specific things you're going to focus on, track your results. Tracking your results, and a lot of people don't track. I'm going to be offering a tracking system, and I'm giving you guys a special. I'm going to just 2 seconds to do it, and then we'll go into the Q&A. I'm doing a webinar in July. I'm taking 10 people. I had it at $825. I'm dropping it to $525. But for the 4th of July, I'm creating a special $444 for 4th of July. But you must email me, and you must have seen this presentation and said, I want the 4th of July special, and it's to only the first 10 traders will get that price. So it was $825. It's about an hour and a half, and then I have a follow-up with each person. That's why I only take 10, because it's very specific, and I teach you my tracking system. That tracking system You don't have to use 24/7, but if your trading goes off, it definitely helps you. Okay.
Well, Robin, how will they contact you? Should they contact you through your
Email
website?
me. My email. So RD and the word coach 22 at Yahoo. RD coach 22 at Yahoo, and just say I want to do the tracking webinar for the 4th of July special, and they'll get that special. Okay, RD coach 22 at Yahoo. Okay, we're going into rapid fire. Rapid fire, that's my new name John just gave me before for Q&As. Okay, let's go.
Okay.
Questions.
First one I see here from Shubham, and make sure that you get your questions in because this is going to happen fast. Yep. All right, you ready?
Yep.
Shubham asks, how do I balance confidence in my edge with humility and execution so I don't overstep or underact in the live market, especially when I freeze, second guess as a trade starts going against me?
Okay, when you're second guessing, it's based on uncertainty. So the reverse of that is certainty. Whenever you have a challenge, reverse it. So you're uncertain. How do you get certain? What could you look at in the moment to get more certain? Is there an indicator that you're not looking at? Is the market, are you trading ES and is it following the NASDAQ? What's NASDAQ doing? So look for something that will create more certainty in the moment to solidify it. That's telling me that your criteria might not be solid enough either. So in that one sentence, I'm seeing that he's got an emotional something going on, that his criteria is not solid, and he's got a lot of uncertainty in the moment when he goes to do the change. So he's wishy-washy on getting into that trade.
Right.
Next.
Okay. Chris Kennedy has a question, and this is like kind of the comfort and, getting dressed in the morning, part of the daily routine. Chris asks, do you believe traders should pick a professional outfit? Treat your morning like the beginning of a work shift. He comes from a blue collar background. Trading became a fantasy. Should I treat it like a 9 to 5?
It is your business. You have to like what you're wearing. I pulled this out today because of the 4th of July, but I do have my trading shirt, and it says Super Trader on it, and it's got I have had it special made. It's the Superman logo, but it's for a Super Trader. And I'm actually selling those. So a Super Trader t-shirt is what I use when I trade. So yes, do it. If it works for you, do it.
Yeah.
Next.
Well, Robin, I was working with trading psychologists many years ago, and they used to say, you can actually feel better from the outside in. Like you buy a new dress or you buy a new suit, you feel better from the outside in. They told me, just put a smile on your face in the pit. No matter what's going on,
Exactly.
Put a smile on your face, and you will start to feel better. And I thought they were insane, but it actually does.
That's
it actually
perfect.
does help. So if you want to act like a
Absolutely.
professional, maybe dressing like a professional would be something that would help. Excellent
Exactly.
question.
Yes, excellent.
Doom has a question. How do I stop marrying a trade, even if I see that I'm getting the complete opposite by the market?
Okay, so he's trading with a block because the block is holding on to his mind and not allowing him to use his logical mind to make the decisions. His subconscious holding on. I'm going to get my money back. I might be wrong. I might not be right. So there's a fear there. He needs to get a block removed, or he needs to look at his indicators and have a question. Is this indicator in my way? Is it going in my way? Is this one going in my way? Go through your indicator, your checklist. Yes, yes, no, 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 no. Get the heck out of there. Right. So if the only 2 of those say get out of there, and if you just close it or put in a hard stop where it's going to stop you, use your hard stops to let it hit the hard stop. What's the worst thing that happens? You get in another trade. Right. Traders are so inclined to hold on and hold on and hold on to their number. There's another trade around the corner. You just want to minimize the loss. So don't hold on. Don't let Mr. Market seduce you, and just get out of there and walk away from the machine until you can get your composure back. That's another way. Just, you got to stop your mind from being in the subconscious memory that it's working from.
Do you
Next,
Robin, do you find that the traders, like, if they're in a position and maybe they're even in the money on it, but something in the market changes that tells them this is probably not going to continue? Do you find that traders they hold on to that trade even though they're getting contrary information at too great a rate? I mean,
okay, so that tells me a couple things.
The arguments,
yeah,
right?
They want to prove that they're right or that they're not wrong, and they're fighting against Mr. Market. And the people lean toward one word or another. They lean towards the word wrong or they lean towards the word right. These two sentences mean the same thing. I'm afraid that I'll be wrong. I'm afraid I won't be right. So they mean the same thing, but you lean towards one or the other. And so you can't let your ego get in the way and prove that you're right. You just have to let go of that. It's a hard thing to do because, we all want to be right. And men in particular, you've been raised socially to be the little train that could, the breadwinners, the number one, the top of the list. So men have been socially conditioned. Well, they used to in the past. I know it's changed a little bit now, but they used to be. And women have emerged strong now, and they want to be the best. So yes, that's a challenging thing to do. So again, if you have a challenge, reverse it. Reverse the language and come up with a solution. Find out the challenge, reverse it, and come up with a solution. That's the process.
It's all just doing the work. All right. Soupy asks, question: why do I let my losers go so long and profit so little? I love this question. I know you've got a lot to say about this.
That's similar because you're holding on to prove you're right, and you don't want to lose. So you say, well, it's going to turn here. It's going to turn here. That's telling me whatever your indicators are, you may not be looking at them, or you're not in emotional control to do what you need to do. So you should have your targets, wherever your targets are, above or below on your long or shorts. Have your targets ready, and don't. It's the same as the holding on. You're just proving to be right, and you want it to be profitable. Say to yourself, am I better off exiting this and just re-entering? Because if you get into a trade and it goes against you, if you let it go too long, now you're in deep doo-doo. But if it's going wrong and all your indicators are not working, you can minimize the loss and re-enter, at a better price. So you can say in your head, where could I re-enter at a better price? That's sometimes a question. I gave you this way in the first session. Questions will cause your mind to get out of your subconscious memory and go into your conscious mind, because it looks around for the answer to the question. So asking a question, a good question in that moment, figure out a couple good questions, write them down, and go to that piece of paper, read those questions, answer them, and then let that take you.
Yeah, I remember that. We talked a little bit about just the question, is this in my best interest? Brings you right back to thinking consciously about what you're about to do. Thank you for that.
Right.
So Claire is asking what to do when you have a multiple day losing streak.
So this is the recovery plan, multiple day losing streak. So she's got multiple days. First thing, examine the losses that you have. Traders hate to do this. They don't like to look at their losses, but in those days, you might find the gems that will transform your trading forever. Look at each one. A couple of things will happen. You'll find something that you need to trade. You'll create a rule. I classify rules as things that protect your cash, and a distinction is something nice to know, but it helps your trading. So a distinction and a rule, I classify those two differently. You may find a rule in examining them. You may find a pattern, a bad losing pattern in that. That means you're hooked, you've got a pattern, and your octopus is got a lot of legs, and you've got a subconscious block that's repeating it. Have a recovery plan and create a game. I'm going to go back to trading. I'm going to go to sim. I'm going to take, I'm going to plan. If I make $100, I can go live for one trade. So you work. You get your $100 in sim, switch over, take your live trade. If it's a win, go again. If you win, go again. If you lose, stop. Go back to sim. So you create your own trading game to reverse this until you repeat a winning pattern over and over and over again. You've got to get a winning pattern going. And I do have some people in the room that did get trained on the tracking system. And if you want to ask them questions in the room there, you can do that how they like it. But I think I have some people in there that are doing the tracking. They've had incredible results in a 3-week period.
Okay, yeah. If anybody is in the chat, definitely let us know if you're following the program here. And all right, the boss has told me
coaching.
Yeah, or coaching, sure. The boss has told me it's time for the next question. So Mufasa asks, how do we deal with the inability to hold winners longer?
Okay, so you need something on your charts or indicators that will give you your levels that it's reaching for. Levels are critical, and that's support and resistance levels. So you need to have levels that are materializing. You don't want to traders will tell me, I said, what's your goal when you hold for a trade? Oh, it's 5 points. I said, do you know if the bars are even giving you that much? I mean, notice the length of the bars that are happening. I trade from a 5-minute. Notice the length of the bars. If the bars are really short and you don't have the opportunity, the longer the bars are, the greater the opportunity. If you have a big move down, you have a chance of a reversal to go back up at least 50% with a fib. So look at the length of the bars that will take you and specific levels of where you're going to. That may help you. You probably need some more training on strategy and how to read the market. A lot of the traders that are filling out their forms do not know how to read the market. Nothing. They know nothing about reading bars. Read candlesticks. There's a whole bunch of free stuff on candlesticks on the internet, and support and resistance. Those two things become the master of. Next.
Great answer. And thank you, Mufasa, for the question. Gomez Trader is asking if hypnosis helps, and how about using a standing desk to stand up once in a while during the trading day?
Standing desks are great if you can do that. I had a trader at Tudor. He never had a chair. He had one of those big balls. He would stand or he'd sit on the ball. So he was constantly, working on his body. He was one of my best traders. This trader traded the weather, and his best year was $490 million. I coached him from being a trader, a high-end trader in the firm, to being a partner. He was fabulous. But I
think everybody's going to go out and get a ball to sit on tomorrow.
He had a high desk. He had a special high desk made for him, and he was up, so he was constantly up. You have to be comfortable. So whatever's comfortable for you, and that's good to do if it works for you. Next.
All right. Jane Smith is asking, how do we stop taking losses personally? How to not take a loss personally?
Stop trading. I mean, if you can't turn around, you're losing trades. You need coach to watch what people are doing. You need to get some kind of plan. It's that, whatever you have is not working. You have to examine the loss, figure out what the change is, test the change, and then incorporate the change. So there's 4 steps. What is it? What do I need to fix? Test it, and then incorporate it. And work that out till you get things working. And don't do it in live mode. Do it in sim mode. The more you work in live mode, testing these things out, the more losses you're going to get, and it's just going to mess you up mentally. Next.
Yeah, and I think everybody, I think at one point struggles with, taking a loss personally, or at least getting very negative internal dialogue like, oh God, I'm terrible at this. I'll never do this, all that stuff.
And that's you cannot do.
That's not going to help you, right?
Remember,
bad. There is usable information in every trade, win or loss. Like like Robin said a little while ago, there's going through losing trades, and you might find the secret that you've been looking for. And it might have been right in front of your face the whole time. It's just a matter of doing that work. I feel you, Jane. I mean, I think we all do at some point.
And look, here's the bottom line.
Mm-hmm.
This business, you cannot avoid losing. You can't. It's part of the game. We have to minimize what we feel. It's called redefining or reframing the meaning of losing. So in this game, losing's just part of the game. And so we have to just minimize what it means to us. It's different in every other profession. But in this profession, you cannot get around it. And Mr. Market is going to be out there seducing you. So I gave you that technique before where Mr. Market is seducing you, and you got to say, no, you're not getting me this time. I'm out of here. You're not getting more of my money. Watch this one. I'm going to make this next trade, and I'm going to make money at this trade, and I'm getting out of here. And you minimize the loss. Pretend you're playing against them, and every time. One more question.
Robin, yeah, we got about 1 minute, and I have to ask you this question. Does fear usually precede entering a good trade? Is being too comfortable usually a sign of a bad entry? Anything to note emotionally that leads to results when looking to enter? And I kind of agree with this. Some of the best trades I take make me a little bit nervous. What do you think about that, Robin?
If you have your plan and you know your entry, your stop, and your target, you should be comfortable getting into the trade. Trading needs to get to when you're bored. High-end traders are bored with their trading because it's so perfect. Their setup is so perfect. They execute perfectly. They're in control all the time. So a high-end trader works to get to boredom as quickly as possible. If you're not bored, then
you're too emotionally
You're still
charged.
Working on it. Right. You're still working on it.
Well, Robin, thank you so much for joining us again today. I absolutely love the sessions when you come on. You are a boss. You are just quick with the answers to questions, the great suggestions. There were a few people in the chat that did mention that they have been working with you and how fabulous you are. I hope that you have a wonderful Independence Day weekend. And that's, of course, for everybody.
And to everybody, yes.
Greetings, traders. This is Coach Robert with another episode of TopStep X in 5 minutes or less. In this video, we will review the chart settings and options. There are 2 ways to access the chart settings. One is the gear at the top right, and the other we can right-click on the chart and choose settings. It's the same area. There are 4 subcategories for the chart settings. They're pretty straightforward. The first section is candles. We can see the body, the border, and the wick colors, which is a lot I like to have here. The last line, last price. The previous day close currently is not available. The high and low is, and it shows them plotted here in the chart. And we can change all of these colors. And of course, we can change our time zone. The status line is what is displayed at the top right. We have the symbol and the name. Here it is. We can just have the ticker, just have the description, or both. Open market status is this section here, turning on or off. It'll be yellow or green. Open, high, low, close values is this section right here. If I mouse over the candle, move my cursor left and right, they will change according to that particular candle. can turn them on or off. The bar change values is a percentage, which is here. And then, of course, we have the volume, which is here as well. I'll move over the green candles so you can see them a little bit better. This is what I like to see. The indicators is this section here. Whether we want to have the arguments, means what they are set at. By unchecking it, we can just have our straight titles or turn them off altogether. The values are added where the EMA here, the blue, the value of it is currently, well, 18184, but if I mouse over this area, it will show me what the value was at that area. And then the background is just some highlighting that goes behind it, like this, depending on the color of your canvas. The scales are just like it says, the scales on the right and the time on the bottom. The symbol name, we can see, we light up NQ. We turn on the symbol close price, again, that is not available. This is the high and low price, which we can see, it's showing it on the side. The indicator name, if we wish to display it, is showing it right here. But notice the value, indicator value, is under this current price. So I can choose the no overlapping, and it will simply keep them separate to make them easier to see. And these are all configurable options. Countdown to bar close is here. The plus button just makes it easy to the right-hand side, where if I click the plus, it will draw a horizontal line at that level. And finally, the canvas. You can set this up as your own view. Here's a gradient. The top is gray, the bottom is black. We can see it is a gradient. For example, if I choose blue, it will show the bottom is blue and the top is gray. Or if I want to choose yellow for the top, there's the yellow. You can set it any way that you like. Grid lines, whether you want to see the vertical and horizontal, or either one or none. Session breaks is this dotted line, and that is the market open, 5 p.m. Central Time each day. The watermark is what displays the instrument being traded. And the text is the right-hand side and the time down the bottom, and we can change the size of these and the color of the font. The lines themselves are these lines right here separating them. The navigation is down the bottom right here. It goes away, visible on mouse over, and this is so I can move the chart back and forth. And if it's completely off the screen, I can just choose this to reset the chart view. It brings me right back to the beginning. That will conclude some of the chart settings and the options that are available to you.
All right. It's time for Mindset Matters with Dr. V. Dr. V, a clinical psychologist, a funded trader, a hypnotherapist, that was hard to say, and mindfulness instructor. We are so lucky to have her back with us today. I know everybody looks forward to having the good doctor here. I know I do. Doctor, how are you today? Say hello.
Hello, I'm doing amazing, Hoke. I get to hang out with you, so that's a wonderful day. You forgot to mention that I was a recent champion at the Reversal Challenge.
Oh, that's right. That's right.
Yeah, taking a lot of pride in it.
She's got chops. She's got the chops. The Reversal Challenge.
Yeah, I got killed the first time, but I came back. Stronger.
Well, there's no shame in that. I've been killed on the Reversal Challenge a number of times.
Very interesting for the psychology and the mindset, right?
Right? I mean, there's no pressure. It's the size that it usually ends up getting me. I do well early, build up some some bread in the background there. And then once we start getting into the size, I usually end up the wrong way. I don't know what it is.
I mean, I think at the end we had 15 NQs, right?
Yes.
So when you take a reversal and you change your position with 15 NQs, that hurts.
Yes.
I mean,
that's when it matters, when you get 15 contracts on, right?
I mean, size matters, but yeah, 15 NQ, it really does.
Seeing some comments about your shirt. They're liking your shirt. We got a lot of Star Wars folks here. Usually you got some heavy metal band on there. I've seen
That's
Metallica,
amazing.
AC/DC.
I
Star
love
Wars it is
It's so
today.
cool, you know, like
Well,
I am your mother. There's a lot about the father, but not a lot about the mother. Anyways, yeah. So I'm very happy to be here. I want to say hi to chat. How are you guys? Welcome home. Welcome to Mindset Matters, because it does. And
100%.
I'm so happy to be here. So, like I said, hanging out with you guys. I want this time that we have together now to be a place where you feel safe, where you feel heard. Okay. It is, like I'm always saying, right? Trading is hard, but you don't have to do it alone. We are here, and this is at Mindset Matters, where you can really share with us what's going on, and I will do my best and hope to help you go back to the right track. Okay. Also, because we've been there, and me very recently, and still struggling sometimes too, right? Of course, it's not easy, but we've been there, okay, and we know it's hard. So, welcome.
It is hard. Doesn't seem to get any easier either.
Yeah. I mean,
sometimes. Good times, bad times. You know, we've had our share. All right. You ready for some questions?
I am ready.
All right. Alfie's asking, often when I find myself taking profit, long or short, it causes a dissonance where now I'm out of the trade and I can only get back in by doing the opposite, shorting where I was previously long or vice versa. Other than recognition of this as a trigger, how can we as traders reconcile this impulse? So when he's long and he gets out, the only thing he can do after that is to get short. Or if he's short and he gets out, the only thing he can do after getting out of that trade is go long instead of maybe catching some continuation. What do you think of that, Doctor?
What I hear, and thank you so much for your question and for sharing this with the community, of course. What I hear in this question is, I don't have a system. I don't have, and when I say a system, it's not only having a strategy. Let's say I'm a VWAP trader, okay? So if I go long VWAP and it reverses on me, I'm going short. Like, it doesn't matter what kind of strategy you have. The idea is choosing a strategy that you feel comfortable in first, but then dissect the strategy to its most little pieces. And these pieces are rules that you will follow. And these rules will tell you exactly when you should get in a trade, long or short, and when you should exit the trade. And you going in the opposite direction would need rules to go in the opposite direction. Because at the end of the day, it's not a slot machine, right? It's a hypothesis. Sorry, it's my trading view alert. Look at me. At the end of the day, it's having rules. And the way I see this, and I hear this question, is maybe it's not clear enough for me when I have a setup or not. you know? And I think one thing that helped me get out of trouble is what I do. I always look at the bigger picture. And in the morning when I prepare my day for trading, I will choose a side for that ticker, that product. Okay. So this morning I was more oriented short towards ES, for instance.
Okay.
Okay. Because this morning, so to trade the right way, you need to look to the left. Okay. Always remember that. As far left as you can. Okay. This is the far
We
left.
are showing your screen right now, Doctor, just so you know.
Yeah, I see it. So I look to the left. What information is important for me, even if I trade the 1 minute or the 5 minute chart, is that ES looks like it's trading in a rectangle for a while. You know, we are like ranging, kind of trending in a range. Okay? Looking at this, I see that I have an upper boundary here of the range and a lower boundary. Again, guys, your lines don't have to be perfect. Just get an idea of where you should find resistance. It's not about being perfect, it's about understanding. So, this morning, what was happening is that I saw that we, last Friday, tried to break out of it, but failed with a very big bearish candle. Then we came back to the level, failed, okay, well, rejected the level, okay, with this is a 4-hour chart, by the way. Rejected the level, then continued down, but I have an uptrend. So this candle, even though these two candles are bearish, they are still in the context of going up, okay? But this morning, we lost that trend. So what I was expecting is, oh, maybe we are going to continue and go back to the other side of the range. So that was my thesis for ES. So for ES, I was not looking for long, even though I'm probably sure we had 200 ways of getting long in ES today, right? But for me, this is how I rule. I pick a side, basically, based on my understanding of the market movements. It doesn't mean I'm right, but I focus on one side. And then I go on my 1 minute and my 5 minute chart, and then I identify intraday levels that I will play out of based on my sentiment.
Okay. So you're looking at a longer time frame for context. What's the bigger picture telling me? And then you're kind of going down to shorter time frames for entries and setups.
Yes, intraday level. I use sorry?
No, I was just going to say a lot of folks, do that, and it's a good idea to get your context from longer time frame. So you came in today thinking, all right, unless something changes, I'm looking for opportunities to short.
Because we are losing the directional pressure up at the moment. I mean, this is a 4-hour candle. So at some point, we lost trend. So I trade what I see, okay? Trade what you see, mindful trading. I know it's hard not to try and make sense or anticipate because we are human. It's very useful in our day-to-day life to anticipate, okay? But in the markets, we need to wait and trade what we see. And then what I saw was this breaking trend. And because I take my trades on the 1 minute or the 5 minute, this is plenty of move for me to make money. Okay. So, and also I stopped with my Shira attitude that I had. Okay. And it's still, it's hard. Okay, guys, because like I said, I want to go hard or go home. Right. And not a good mentality. Okay. So now I'm making $500 a day on average, and I'm so happy because I caught myself thinking the other day, wow, I just made $1,000. you know. I was disappointed in making $1,000 in like a couple of hours or even minutes. I got disappointed in that. What is wrong with me? So I said, you know what, lady, you're sizing down right now. This is not okay. Because now you're not process oriented anymore. Now you're trying to focus on the outcome. And what's the limit? So the day I remember starting trading and saying, wow, maybe one day I'll make $1,000 a day trading, you know, maybe that was like, wow, the holy grail.
Huge. Sure.
Yeah. And then you get to that point and you're like, well, I'm used to it now. What's next?
So can I ask you, when you were like, you were up $1,000 and you're disappointed in that, what does that tell you? I mean, are you belittling the profits, or are you belittling the work that you've taken to get to the point where you're capable of doing that in a day? What does that say?
That I'm looking for comfort from the market, that I'm looking to feel something more, I'm looking to be alive, maybe.
Well, you are She-Ra.
Yeah. And again, I mean, because I'm very competitive too. So like when I go to the gym, I always try to go, when I'm comfortable with some movement, to go higher in charge. Like I want to challenge myself all the time. I'm like that. I'm really not like sitting on my stuff saying, you know what, I've made it. No, never. Again, here, it's not about the profits, right? That I need to push myself. It's about how well I can respect my damn rules. That is the true power. But because we came into trading for the money, we think the money will be the reward. But it's not.
Interesting.
It's the pride that we take in doing what's right for us.
Doing what's right. Following your process.
Yeah.
The greatest traders I ever knew taught me that lesson. Steve, how did you make so much money? And he said, well, that's the wrong question. I said, what do you mean? He says, I came into trading, and every day my goal has been to be a good decision maker in trading. And I worked to become a good decision maker. And as I became a better and better decision maker, the money started coming in. He really viewed the money as a byproduct of process and being a good decision maker.
That's totally
there's
true.
more than just financial reward here. It's the reward of becoming a good decision maker, and becoming a good decision maker inside and outside of trading, right? I mean, it kind of bleeds over into the rest of your life if you can kind of feel that, right? All right, should we do another question?
It's an identity shift. Don't expect to have crappy habits, turn on your screen, and be like great disciplined trader. Bullshit. Not gonna say a word. Trying to watch my language here. So yeah, I hope it answers the question. I'm really easily, you know, passionate about stuff. So that was a very long answer, but I really hope that it did something to it.
Well, we all love your passion, Dr. V. We all love it. Absolutely. Walter's got a question. How do I overcome the fear of placing or holding bigger trades on express accounts rather than combine accounts? There's more risk. There's more skin in the game there. What do you think? How would you answer this, Doctor?
I would answer this by a lack of trust, probably, and also a lack of experience. Because the sim environment is there, not again, and I would add to my answer that it's also linked to the mind being focused on the outcome, you know, because with more risk, you see that you can lose more, that you can win more. So it adds like, so money is on your mind, you know? So you need to build trust with repeating the same habits. And the sim environment, a lot of people tell me, well, it's not the same. Nothing's at stake. Like, why should I be good in sim before I go to live? I need to feel something's at stake. Imagine if every athlete would not go to practice because there's nothing at stake. You know, there's no game. Nobody's watching. Why should I practice?
Why should I practice? Very good point.
That doesn't make any sense. They practice more than they play for real. What does that tell you? Right? It tells you
very good point.
You need to build the muscle memory. Your brain knows, your brain needs to know what to do systematically. It has to become a part of your brain. It has to become a habit. It has to become thus unconscious. The size will come later and slowly.
Yes.
Okay? Slowly. The thing also you need to understand, and I'm talking to myself at the same time, by the way, okay? It's gonna take a freaking long time to get there, okay? It takes time. Yes, I'm talking, like I said, an auto therapy here too. You need to be ready to put in some time, okay? You need to see charts. No, let's say that you're lucky, you found your system very fast, you found your strategy. Now you need to see charts. You need to get to know different products. NQ doesn't move like ES. CL doesn't move like gold. Well, sometimes it does. You need to know their personality. You need to test your system with different market environment, different time frames, time of day, etc. So there is some experience that you need to get from the market. You need to see screenshots. You need to go into replay. You need to go in back testing. And also when building your systematic system, because there are so many rules, you want to test them, a couple of trades, come back to the lab, fix what has to be fixed. If it's working properly, you're sure don't touch it. But it's the back and forth that takes a lot of time, and the screen time. So if you feel that you get emotional because you put on size, you are just not ready to put on size.
Doctor, don't you feel like adding risk to your strategy, even no matter how much you trust and believe in your strategy, it's like lifting weights. You know, if you can do 135 pounds 5 times, don't start trying to lift 200 pounds. You have to work your way up to it, and it does take time to build those muscles to be able to, you know, have the pressure of having that much risk on. It changes your decision-making process. And, you know, as we all know, lifting too much weight can also be very harmful as well. So I kind of look at them the same way. You start with ones, the biggest jump you move to is doubling your risk to 2. And then you add another contract that adds a third again as much. And then add another contract that adds a 4th again as much. And you build into size. That way, Walter, you may not have the muscles to take those trades, especially in an express account when you know you can make money on it, which I suspect is part of the reason why you are trading bigger size, because you want to make a lot of money, which I get, but you may just not be ready for that. All right.
Totally. It's a gradual process, like you're saying, very important, because you need to desensitize your amygdalas. In your brain, you have an emotional brain, a very primitive brain that was there when you were born. So that's a very old brain there, okay? Very wired, very protected too, because I do like this, because you have the cortex protecting it. Okay, so if something happens to your brain, this is the last brain that's going to get hurt. Okay, so very, very primitive, very wired. So if you add size too fast, your brain's going to trigger very, very strongly because it feels like a threat. You're not ready for it. You need to desensitize slowly. Also, when we talk about size, not every setup is worth size. You get to know your bread and butter with experience too. Okay.
Great point. Yeah, not every setup is worthy of big size. Absolutely. All right. Michael's got a question, and we just talked about this in group coaching in the segment prior to this, and I want to hear your thoughts on this, doctor, because you're a doctor. So what tactics do you use not to give in to the urge for a capitulation trade, the screw it trade? And yes, I do know Michael, and it seems to be an issue for him. He was asking us, what do you think about that? You're down to your daily loss limit. You just say, well, what's another $500? I'm gonna put max position on, and if it goes my way, great. If it doesn't, oh well. You just give up and you just see what happens. What do you do about that?
These trades feels good, right? They feel amazing. I mean, I'm laughing because it happens so many times to me, right? It
Like
sucks.
Jesus,
And what's the worst is when they win, you're like $25 from blowing your account and then you make $1,000. You're like, holy cow. Okay, I get it. Totally human thing to do, obviously. Okay. So Topstep is the greatest prop firm out there. Okay. For futures. I mean, I'm so blessed to be trading with Topstep. I love it. I love Topstep X. Greatest platform to trade. Okay. I mean, they care so much about us. They put risk for every category where you can screw up. Right? So you can set a max trades per day, a daily max loss amount. You can prevent yourself from adding to your position. Everything's there. You can also say, I don't want to trade NQ because it's a B, right? You can, protect yourself in so many ways. Please, guys, use these settings that are awesome until you can build these habits. Okay, try yourself to say, what are my rules are? Because trading is a business. Never forget that. Okay, I know you're sitting at home. Sometimes I'm taking a bath and I'm taking a trade. I get it. Okay, it can look too easy sometimes. It's still a business. So what are your rules exactly for your, how much are you willing to invest every day for trading? Think about it. They are real dollars. Okay, so how much per day are you willing to invest? You will never see that money again. Think about it that way. Okay, that's, am I ready to invest $500 a day in trading? That's a lot of money, So ask yourself that. What is your business is willing to bleed out on a single day? Again, don't think about the money. Think about protecting yourself. How can I protect myself is I need to set rules for my business. And then when you have everything set in the platform, you're okay to trade, it's going to take you out. So it's good. Technology is there. Use it to your advantage. I'm not saying only rely on these automatic settings, because at the end of the day, if you want to be a trader, you will need to understand that you have to be disciplined in being systematic. Okay, that's the secret sauce, right? But it really, really helps, especially if you're stuck in a loop and you cannot stop, using this strategy over and over and over. And you need, okay, why am I not disciplined? Journal your mind as well, not only your trades. So I would say, first thing first, like you detox a little bit, take a day off, okay? Like take some time off. Like you need to relax a little bit and take some distance and understand like what's going on with my trading. I don't know what I'm doing because I'm blowing accounts over and over again. Stop and assess. I would say that.
Mm-hmm. I never really, I have thought about it before, but how good that capitulation trade really feels, right? And then the worst thing that can happen is you have a windfall from it because it's just going to, embed bad behavior. The next time you're in that situation and you have that same feeling, you're going to think, well, I remember what happened last time. And as we were just talking about in the previous session, most of the time it's not going to work that way. It's like 9 times out of 10, you're just going to hit your daily loss limit and you're going to have to reset or whatever you have to do. God forbid it's in your own account and you're losing your own money and you're hitting that capitulation and burying an account that way. So Dr. V, I love what you said about Topstep X. You can set parameters to where you're not going to let that happen. You can set that every day. And yes, we really do care about our traders here at Topstep. 100%. Love the way you put that. Thank you. All right. Felipe. Okay. I'm not alone in this position, but we often make gain on the market and we don't seem to find that amount enough and we keep trading. I know there's a lockout button, but the goal is to be able to be self-disciplined. Do you have any clue on how to achieve that or any cue on how to achieve that? So Felipe is making money. Doesn't feel like it's enough. You just were talking about that with yourself a little bit there. And you keep trading. You got to have that lockout button, right? And you can trail that lockout. The goal is to be self-disciplined. How do you achieve that self-discipline to be able to stop yourself when you're up money? Maybe even you've given a little bit back. That's always the hardest part for me.
Exactly. Again, we're going back to, I know it's boring, okay? Rules. What could help as well is to hide your P&L. Okay, I think you can put the private settings also in Topstep X where you don't show your P&L, you don't show your account balance. So because maybe, again, you're too focused on the outcome, the monetary outcome of a trade. Okay, so the way that you can do it is just like trade the plan. You plan the trade and you trade the plan, okay? So if you're shorting a level, for instance, you have your stop loss, you have your profit target because you expect that level will bounce the price, that is your trade, And you're gonna make the amount of money the market is willing to give you because the market might not go to your level. It might reverse before and go away from you and stop you out. But that was your setup, I guess. It didn't work. Again, it's about going back to the process. So maybe you're like me, a little bit like, I want to make more money. You feel the greediness, the humanness kicking in. Okay, so if you find yourself greedy, every time I find myself greedy, I size down. It's not working. I don't like that. Okay? Because it's not going to get better the more money you make. So we really need to be sensitive, greediness. Okay, I see you here. I mean, it's great. Okay, I mean, it's human. I want to make more money. That's totally understandable. But I had a perfectly good trade here. So I won big time. I was right about the setup. It worked. It went to my target. And I respected all my rules. I'm a winner. So how can you take the outcome out of your trades? So maybe size down if you feel you're becoming a little greedy. set some rules to how many trades you're taking in one day, that would be a good place. Like, again, your business rules. Let's say, okay, that's another exercise that I do with my people sometimes. Let's say that your trading business, you hire another person. Okay, you have a trader now working for you. What are the rules for the trader working for you? And apply these rules to you.
I like that. I like that a lot. I like that because you're working for your business. If you have somebody that is working in your business, there are certainly going to be rules of what they are going to be able to do. So apply those to yourself. Kind of
Yeah, we get so reckless with ourselves, right?
Yeah, because we're the boss, right?
And also we're very good at sometimes at not respecting ourselves so much, but better at respecting others, right? So again, it's an act of self-love to protect your ass in the markets. Think about that. Next time you think about making money, how much is going to cost me to make that much money? And is it really realistically repeatable over time? Over time. Not in 5 days to get my payout, over time.
And that's something that people have a tendency to focus on when they get to XFA is they're looking to get that payout. Some of them probably aren't thinking about becoming a better trader. And that's not going to help you over time, as Dr. Fee says. I really like that. It's kind of a reverse psychology. Okay, I'm the boss, but I'm going to treat myself like an employee and give myself these rules, and I'm going to have to follow them. Otherwise, I'm going to have to answer to the boss. Really great way to put it. I really appreciate that.
So, thank you. And I would put your win rate, more emphasis on your win rate to following your rules than your win rate trading. Okay? So that would be a great exercise for you this week, guys. What are your trading rules? And then you rate yourself according to, am I actually able to obey my rules? If your win rate is, I don't know, 50%, not enough to go live. 60%, not enough to go live. You get the point, right? Until you have a high win rate at following the rules, you're not live. Also, the rules for your system, because if your system is blurry and has 56 reasons to enter a trade, that's not going to work. Okay? For me, I use levels, horizontal levels, and trend lines to trade. That keeps me out of trouble. Simplicity.
Yep. Keep it super simple. Keep it super simple. All right. We've got somebody who sounds very discouraged here, John. And he's asking, how is it that I enter exactly at the price moment when the market goes directly opposite of my entry? I'll wait for the time when I think it'll go in the direction I entered, and every time it will go in the opposite direction. I call myself the pivot man, and I'm really discouraged. What would you tell somebody how to combat that feeling? Maybe it's just a little bit more time in front of the screens, looking at what you're using for your decision making, learning more about technical analysis. And of course, we all need to know more about ourselves. What would you tell John, Dr. V?
I would tell him to take the other side of that position.
I got a story about that, and I think you'll appreciate it. But go ahead and expound on that.
No, I'm kidding. Obviously, so there's information there. That's the great part. What's happening in these trades? So take your screen, record your screen, and look at yourself executing based on your rules. To have a feeling to enter a trade is not enough, right? So you need to have rules to enter a trade. And why you have rules? Because you've tested your strategy in the markets and you know what works and you know what an entry criteria looks like. So maybe it's just your entry criteria that are not okay, that you need to go back to the lab and fix them. So record your screen, look at your screenshot. What went wrong? Because what you're saying, you're pretty consistent in that pattern. So how can you flip things in the opposite direction? Like, what am I not seeing? The markets are exposing precious information for you. Take it. It's a gift. They are telling me something. I'm not seeing something. What's going on? So recording your screen is awesome. Okay, backtesting. Also, if you have some replay option, it's a very nice thing. Train your brain to see a great entry criteria.
Yeah, John, being accountable and reviewing each of those trades, I think would go a long way to help you understand, what was the situation? What did I miss maybe that could have created a more, a better outcome for me in these trades? Dr. V, when you said, well, just take the opposite of the trades you think you should take, there's a name for those. We call those Costanza trades from Seinfeld. George Costanza decides to do the opposite of everything he thinks he should do, and his life gets better. I was in the S&P pit, and I was buying every high, selling every low, scrambling out of losses, just consistently, probably feeling a lot like John is actually feeling. And somebody that was standing behind me, I didn't even know this guy, but he pokes me in the back and he says, "You have no idea how good you are at this." And I turned around and I said, Are you crazy? I mean, if you're watching what I'm doing, you're watching me buy every high, sell every low, and getting my ass kicked." And he says, "Well, I see that, but your timing is impeccable. When you feel it's time to respond, try responding the opposite of what you're feeling you want to respond." So I gave him a shot in the gut, and I walked out of the pit, and I went home and I thought about it, and I said, "You know what? He's right. I'm executing at the right time, just the wrong direction." And it taught me a lot about the emotion that I was feeling in important inflection levels. And the next time I had that feeling, I did the opposite. And it was actually physically painful, Dr. V, to do the opposite of what everything inside me was telling me to do. But it worked. And it worked again. And it worked again. It didn't work every time. Nothing's going to work every time. But it taught me a lot about the emotion that I was feeling and how to make a better decision because of those emotions. Maybe this is something that would help John. John, if you're going to try something like that, I suggest doing it in a practice account. Put in your brain that this actually matters. This actually counts in your practice account, and account for the outcomes. Account for the outcomes.
Very interesting. I like that you felt something in your body, right? Like it's breaking but it's so true. Like breaking a pattern hurts because it's a habit.
Yes.
Why do we have habits? Go ahead. Sorry.
Well, even though I had proven that emotion was putting me in bad positions, I was still fighting the idea, okay, next time I feel this, I'm going to try the other side. And it was physically painful to do something that was opposite of everything that every cell in my body was telling me to do, even though it had proven to be wrong over and over and over and over again. It hurt to do something different. And it really broke a cycle of loss in me very early in my trading. And I began to understand that those emotions, while people to suppress or try not to or ignore your emotions or something like that, which I find terribly exhausting. There's information you can use in them.
Totally. But it's seen as a threat to change something. Habits are there because they are better for our survival. The brain doesn't have to think about it. So it doesn't have to give energy to that. So it can allocate energy for making us survive even more, you know? So habits are very painful to change. And we as humans, we are so good at keeping alive a pattern that hurt us.
We almost protect
Very
them.
good at that. Yes, it hurts. It makes they make us like act dysfunctional, yet that is what we know. So it feels comfortable. Even if it's painful, that is wild. That is wild. So also when what the market is exposing technically, but also emotionally and psychologically, like what are my core beliefs? Okay. Like see a losing trade or bad trading habits as an external cause happening to you. Then it triggers stuff, right? Impatience, anger, self-sabotage. It triggers something. And then you need to work with what it's triggered. The thoughts, the emotions. I'm not good enough. I have no value. If I win this trade, I'm a loser. Like, what's going on? What's the core schema there? You know?
Does everybody have that negative inner voice, that inner dialogue that constantly harangues us like that? I know something I've dealt with for many years. You know, does everybody, I think, seems to have that haranguing voice in the back of their head to some degree? Do you have that, Dr. V? I mean, you're She-Ra.
Of course. But I do have some dark spot in my mind, right? And what I feel very, very fascinating, okay? And tell me, guys, in the chat if you have had that too. For me, it really exposed the darker side of my soul, the darker side of the force for me. You know, stuff that hurt you before, you know? And then it's crippling back in your mind again because the market exposes that for you and you don't want that. You don't want to deal with that. Oh my gosh, I can't believe it's still there. I was 10. Like, who cares? Guess what? You still do. So work with it. Don't fight your emotion, fight your psychology, hide anything. Work with it. And I said it so many times. This is my love letter to the markets. Okay. Forever, ever grateful for this journey. Forever grateful for the markets. What they showed me, how they elevated me as a person. In my soul, that's a soul journey. I am not kidding. This is a spiritual journey. It's the greatest gift. Nothing I could have ever done so far in my life, every kind of job, but this job, wow. You know, it's hard, but it changed me in so many amazing ways. So please take yeah, it's amazing. Like from the inside first to the outside. So are we talking about money here? Not at all.
Right.
Deal with your shit and then maybe you'll make money. You know?
You hear that?
Like Tom Hogarth is saying in his book. Yeah.
Deal with your shit.
Tom Hogarth, yeah, deal with your shit. I mean, I'm sorry for the language, okay? I'm sorry about that.
It's okay. You're passionate.
Yeah. And I saw a clip of me on YouTube the other day, and I said, "Damn, I'm I'm a bit intense there." So I'm sorry about that, but you know,
That's okay.
it's like Tom Hogarth says in his letter to the markets, and at the beginning of his book, one of the most beautiful letters directed to the markets, and he says, "At some point, the markets told me, stop trying to understand me and start understanding yourself." Because he quit trading for a while. He sucked big time. He couldn't do it anymore. But then he took a break, took some distance, and then he got it. I need to fix my own stuff. I need to unbecome in order to become. And it's a whole identity shift. I'm not kidding. So are we ready or not for this?
So when you're saying that that nasty inner dialogue, that dark place, the dark force inside of each of us, I've read different places where you should talk back to it and kind of disclose its lies. Most of that dark voice or that negative dialogue, self-dialogue is lies. I mean, we tell ourselves how bad we are, and we're not. We tell ourselves we're not good enough, and we are. I've read that you're supposed to talk back to it and kind of discount it, and I'll tell it it's full of lies, and eventually it'll quiet, but it'll never go away. You say work with it. How do you work with it?
So it's a process. It's cognitive behavioral therapy. Okay. So we need to identify the thoughts, dissect them, and then make them transform them and deactivate them. For example, a very core belief that we had as children was Santa Claus. I still have the belief inside of my brain. My Santa belief is still there, but it's not activated anymore. It's the same thing. We learned as children to survive. We learned some thoughts. We learned some behavior patterns that we had to adopt to just grow in our family, just to survive at school. School is hard. Okay. So we can develop some patterns or some thoughts about ourselves because some people told us or treated us not the right way in the past, maybe. So or maybe experiences that did not go our way, or maybe a series of failure. I don't know what it is, that at some point we had some negative idea about ourselves. I'm not enough, or I need to be useful to be loved, or nobody will stay with me, or if I show my emotions, they're going to walk away, or they're going to get mad. So again, what are these thoughts? Okay, you need to see them, and then you need to write. Very, very powerful tool, writing. Okay, if you write, let's say that you identify that when you lose a trade, you hear yourself say, "I am a failure." Okay, so you need to be self-aware here because sometimes it's very subtle. Okay. And then you start this journaling exercise where you just rewrite this again. I am a failure. What's a failure? Well, if I am a failure, nobody will love me. And if nobody will love me, I'm going to be rejected. And then I'm going to be alone. And you see that there's a whole story behind that. I'm a loser. What does it mean to be? Yeah, exactly. So really dissecting these thoughts, and again, building new ones. Every time you have this thought coming, you say, "Hey, thank you for showing up. You were pretty useful for me at some point in my life because you helped me survive. That was a very tough environment at school. And I need to please people to have friends. I didn't have a choice. But now I don't need you anymore. You're not helpful." And just observing, and meditation helps a lot to recenter and become also the observer of what's going on. Sometimes we're not even aware, but the markets will keep showing you until you start working for it. Yeah.
So you straighten out your shit.
Mm-hmm.
Do you agree with this statement?
Yeah.
We're getting pretty close to the end of the segment here. And again, Dr. V, I absolutely enjoy and love sitting here talking to you. Your passion,
Me too.
your wisdom, your skills. It's just amazing. One of the first things somebody on the trading floor said to me the first time I stepped on with my shiny new badge and I was going to be, at risk and taking trades. And he says, "Hey, Hogue, congratulations. Just remember, you can make anything you think you are worth." Do you agree with that statement?
Oh, totally. Because we tend to create what we think because we pay attention to what's inside of our minds. It's like a flashlight in a dark room. What you pay attention to, you see. So if you think you're not good enough, you will have only, it's going to attract for you, for your attention span, only cues that align with that. Because again, the brain loves to be right about something. So you create what you believe in some way because you see what you think.
I still, for the record, believe in Santa Claus. He stops by my house
Me too.
just about every day, but he comes in an Amazon van.
And you pay him actually.
Right. Somebody does. I don't know. I'm not ordering this stuff, but it seems like he's here every day.
That's so funny. Totally true.
Dr. V, do you have any closing comments for our traders that were with us today? And great questions, folks. I know we didn't get to all of them, but hopefully, everything that Dr. V was talking about and going into today has touched you. Dr. V, any closing comments?
I want to say, thank you for sharing this. Thank you for being here. And I know it's not easy and sharing with us. And I would just say, I love you and I really care about all of you guys because I know it's possible. Okay. You just need to go slow. And I wish you the best. And I will see you next week.
We'll look forward to it, Dr. V. Shira, folks, the force is strong with this one.
Greetings, traders. This is Coach Robert with another episode of Topstep X in 5 minutes or less. In this video, we will be going over the personal lockout feature in the Topstep X platform. On the left side, you see a gear. Clicking on the gear will bring you to the settings area. We have a menu across the top. Be sure you're under the risk settings tab. And on the right-hand side, you will see the personal lockouts. By setting a lockout, you will no longer be able to trade during that particular time frame. For example, we could choose the New York session, which is open now. Once the market opens again, we can choose the London or the Tokyo session or the Sydney session. You simply will not be able to trade between these time frames. If you choose one, simply choose yes, lock me out, and you'll get a confirmation as well. It pertains to this particular account, whichever one you have highlighted in your trading system. You can also just say, I want to lock myself out for 15 minutes and lock yourself out. For example, if you feel yourself over trading or what they call going on tilt, 30 minutes, 1 hour, or all day. Finally, you can also choose custom, where you can set your time to lock out until, not a problem. The second piece is the trade clock. Now we need to have an active position on in order to set this. And basically what this will do is not allow us to trade with a position on until that position is finished. So let's go over to here. I have a temporary combine. Just to make it easy, we're putting a buy on MES. And let's go back to our settings. And now we can have a trade clock where we can say, hey, I don't want to take any more trades within this time frame. So let's put this on 1 minute, for example, enable the trade clock. and it will give us the amount of time that we are locked out from trading. So if we go back over, we can flatten and cancel all, but you'll notice that none of the other options are available. And this is a good feature for those that may want to add to losing trades or get stuck in overtrading if the market is moving too quickly. And as you can see, we have a trade clock here. We have a trade clock here. And if we just go and choose the lock,
order filled,
flatten and cancel all, we can see that we can now enter another trade, and that disables the shot clock. And there you have it. This has been an episode for the personal lockout feature in Topstep X.
Topstep X's position brackets have been updated to now be account specific. They are no longer global, applying to every single account that you have. So if you are a multi-strategy trader and you like to divvy up your risk a little bit differently across your accounts, this is for you.
Sometimes when you're in too big of a size, you get too fixated on longs. But when you trade smaller size, I can see, this is resistance. Doesn't matter if I'm up a certain amount. This is big resistance. Reduce your size, you'll be able to see the markets from that neutral perspective, and then slowly scale up and scale to a size where you can always see the markets neutral. So I would love to see gold go up. We're at resistance, we're tagging previous hourly highs, have to manage the trade.
And to be honest with you, I'm not staring at the charts all day. Like I said, I trade in a 1 hour time frame. And I think maybe the reason I do that is because I work overnight, and I don't want to try to be sneaking trades all the time or taking too many. So, I set those alerts. If the alerts go off, I'll hop on my phone. I'll take a look. If I like a position, like I said, I'll take a position.
It's not about the profits, right, that I need to push myself. It's about how well I can respect my damn rules. That is the true power. But because we came into trading for the money, we think the money will be the reward, but it's not.
I've seen NFP moves. I've made money on NFP moves. I don't want to dabble with it, man. I've seen that thing make like 350 points one time. I was on the right side of it. I left my trade with a $400 stop. Woke up 4 hours later on my couch. People, I have $7,300. Sell it. Sell it.
I love you, dude.
Yeah.
Click like, click subscribe. This is TopstepTV. Let's go.